Hello, everyone. A very good evening to you all. Welcome to the first lecture of a financial management paper of ACCA. I hope all of you are doing well. We're going to be beginning the first class with a quick round of introduction about ourselves. I'll go first and then I'd request you all to share about you as well. So, I am Anushka Jain, CA and ACCA, and your mentor for the paper of financial management. I am a chartered accountant qualified in 2017 with all of the levels cleared in the first attempt. So post qualification, I started working with Coca-Cola in Bangalore, and it was during this time that I got interested in international finance and accounting practices, and I decided to take up ACCA. The first paper. So, being a chartered accountant, I had to just give the professional level exams, the two mandatory ones and the two optional ones. So, the paper which I chose first was it's the core area of my work, which is advanced financial management. I got All India rank 1 and World rank 2 in the paper, which I gave in June 2019. Then I moved on and gave two papers together, which is SBR and SBL in September, and in December I gave APM. And after clearing all the papers in the first go, I was done with the ACCA qualification by Jan 20 when the results came. And it was during this time that I started teaching ACCA students formally. I got associated with VGLD, and I've been teaching students since then. And post my stint in Coca-Cola, I moved on to Pernod Ricard, India. Pernod Ricard, India is a liquor company. You may know it by the brand name Seagrams. So, worked there for some time, then moved to Flipkart. I'm sure if you're based out of India, you would know about it for sure. Then post Flipkart, I got a call back again from Pernod Ricard, India, to join them as the head of finance for Northeast India. And that's how my corporate journey has been. I got married recently, and I have now moved to full-time coaching of ACC students. So that's what my journey has been. And now I would request all of you to please send me in message in chat what I'm sure your name would be visible. So your place where you are from, whether you have done ACCA papers earlier or this is your first paper, and if you're studying any other course, and also if you have done any paper from me earlier, I would love to know that as well. So let's begin. I would request all of you to please, I can see a lot of familiar names already. So please start with your introduction, where you're from, what do you study, and any paper that you have done. Just message me together in one paragraph. Okay, so that I'm able to read together. All of you, please send in your introduction. If you have done any paper before or not, let me know if it's the first paper. Okay, I see Alok is from Haryana, preparing for FM, given FR in June. Okay, perfect. Mansha is from Haryana, given exam previously for FR and AA. Bhumika is from Karnal, pursuing BCom honors, second year. Okay, first paper of ECCA. Well done. And Harshita, I've just given my second exam audit. I work for an Australian-based company as an accountant. Currently reside in New Delhi. Uh, who has logged in from Redmi Note 7 Pro? Okay, I see. Rashika. Rashika, you have done CA already? Then Shalab is from Dhanbad, appeared for FR and AA in September attempt. Shreya from Delhi, given previously. Shreya, have you studied from me before? I had a student with this name earlier. Yeah, okay, but you didn't give the exam? You had done PM if I'm not wrong. You didn't give the exam? Okay, okay, okay. Um, Avantika from Delhi, whole knowledge level and moving on with FR and FM at this time, side by side. I'm doing graduation from DU. Currently in second year of BCom. Okay, very good, Avantika. Preeti is from Delhi, BCom third year after exemption, EC skill level, 367, PM in September attempt, but done with FR and AA. Okay, well done. Sahaj is from Chhattisgarh, first paper. So, Rashika, how come you have not taken exemption for the skill level papers if you have done CA? Rupinder is from Ludhiana, preparing for FM, first paper. Like, very good. Saujanya has completed 12th and currently studying BCom, preparing for FA, but recently I received conditional exemption, 5 subjects, and I'm preparing for FM and this is my first paper. Planning to give my exam in December. All right. Fareen lives in Vadodara. Recently completed BCom. This is my second paper. Skill level. Just give my audit paper. BCom student Komal, Kolkata, preparing for FM. I've cleared knowledge level in corporate law. Well done. So I see some of you have come from the knowledge level route as well. Varsha. Okay, yes, I remember you. Just finished the BCom third year exam and done with C Inter last year. Well done. Very good. Devanshu is from Jaipur, Rajasthan. First paper of EC and adapted CMA intermediate. Very good. Okay, it's your demo class. Fine. Abhishek is from Jodhpur, cleared BD, FA and studied MA but didn't appear for MA, but will be taking exemption given FR in September. All right. Well done. So we have a mixed class. A lot of you I see are giving their first papers. Some of you are giving, exam. I have already given exams earlier. So well done. We are gonna start as if it's like a neutral batch. No assumption of any prior hand knowledge. So don't worry. So now we'll have an orientation of the FM paper. So those of you who are giving exam for the first time, stay very alert. A lot of new things could be coming your way, so just pay 100% attention here. So the exam is a computer-based exam, right? And the approach to examine, it's gonna be conducted either in a center or through a remote-based exam. Okay. Ma'am, what do you mean by remote or center-based exam? So first thing is very clear. It has to be on a computer. Remote-based exam means that the exam would be done from your home. You can give the exam from anywhere. As the name suggests, remote. You'll be using your own computer, desktop, or laptop, whatever you want to use to write the paper. Other option is you go for a center-based exam. Now, center-based exam is a typical center, like how you would have written your papers in the past, where you go to a center and write down your paper and then you come back home. So in the same way, here you will be given a desktop at the center. It's no longer a pen and paper exam. So you go to the center, write your paper on a computer and come back. Everything is managed by the center. So computer-based exams. So the two ways these exams could be conducted. You can make a choice for yourself. For center-based exam, the seats get full very soon. So if you are opting for center-based exam, please do make sure you register for the exams on time. Approach to exam. There is no choice in this exam. There will be no optional question. Everything that I'm showing on screen now, you will get it. So no need to copy anything from the slide. Anything which I say extra, if you feel is necessary, you can write that down. But slides, everything you will get. So you can focus on listening for the time being. So there is no choice in this exam. All questions have to be answered. All questions would be mandatory without any choice. Okay? Then there is no negative marking. So what's the best thing? Never leave any question unanswered. Even if it's a guess, go ahead with it. But only if you're not confident with it. And the entire paper doesn't have to be solved on guesswork basis. Right? So there is no negative marking. All questions therefore should be attempted. Exam duration would be of 3 hours total you will get. There's no bifurcation section wise, nothing. It's all in your hand how you manage your time. I'll give you tips to manage time, that's separate, but otherwise the ACC body does not specify anything. And pass mark would be 50%. Okay, so it's a 100-mark paper. Out of 100, you need to score 50. Now, the paper is divided into 3 sections. Section A, B, and C. Section A and B are objective test questions. And section C is a constructed response question. Objective test, as the name suggests, you might have to choose from different options. You might have to fill in a blank. You might have to input a number in a box. You might have to match different activities. It's not necessarily MCQ. Different type of questions could be there. But you do not have to, draft a big response. Simple, short questions would be there. Now in section A, total 15 separate, individual, independent questions would be there. And each of these questions would carry 2 marks each. 15 questions into 2, total 30 marks of section A. Then comes section B. Section B will have 3 scenarios. Very, very clear. 3 different case study type of questions would be there. And each case study would have 5 sub-questions each, which will carry 2 marks each. I'm repeating myself. Section A is individual, independent questions, no interrelation between the questions. Section B will have 3 scenarios, and each of the scenario will have 5 sub-questions which relate to that one scenario only. Questions may or may not be interlinked. Mostly they are not interlinked among themselves, even if it's of the same scenario. But they're all linked to that one scenario. Okay, so 5 questions into 2 marks each. Again, total 30 marks over here. Each scenario carries 10 marks. 3 into 10, 30. Then constructed response. 2 questions would be there. This is a section C constructed response question where you have to draft proper detailed answers. You might have to do a lot of workings to support your answer. 2 questions would be there and each question would carry 20 marks each. Okay, so 20 marks, 2 into 20 into 40. Ma'am, will there be just one question of 20 mark? No, it will be broken down. It could be like 12 plus 4 plus 4. It could be 16 plus 4. Any question, any 5 plus 7 plus 8 also. Any combination of marks is possible. This is not specified by ACCA. So that is not specified by ACCA. So two questions of 20 marks each. Again, here also you will be given with a scenario. You'll be given a lot of details about a company, what they are doing, what their numbers are, but interesting questions. Okay. So 30 plus 30, 40, and 40. Total 100. This is the breakup of the paper. Okay. Everyone, is it clear? Those of you, especially who are giving the paper for the first time or at the skill level for the first time, is it clear? Any doubt, please feel free to ask. Put it in the chat and we'll discuss. Yes. So you are allowed to carry a calculator. It could be a normal regular calculator or it could be a scientific calculator. So both the calculators are allowed. And it's allowed in both. In remote exam also, in center-based exam also, you can keep a calculator. Okay. And anyone having any query, don't hesitate to ask. You can put it in the chat. We'll discuss. All right. Moving on. So what all you need to study? So first of all, very, very clear. We are going to be associated over till November, right? Where you will be studying from me, you'll get trainings from me. So we are going to be using VGLD book in our classes. Okay, it's very comprehensive. You will get detailed notes from me. I share them in Excel. Okay. Whatever questions we solve in the class, you will get a solution also in Excel in the same file. So what I do is I share chapter-wise Excel files. Okay. Once every chapter is complete, I'll send across that chapter file to you. You can use it for your notes for study. Detailed notes would be there. So that's your core source of studying. Then question practice from VGLD. So notes I'll share. There is content in the VGLD book also, but I've tried to simplify it for you in Excel. So that should be completely sufficient. In fact, while I'm teaching you also in the class, I'll refer to the Excel notes only to explain topics. Okay, so that is simplified version for you. Then question practice from VGLD book. And there are some activity exercise questions from within the chapters which we will do together. And there are a lot of backside questions which you can do from the VGLD book. So if you are able to complete this, your core source of knowledge is done, right? We have a doubt. Let me see. Harmeet says, I'm giving paper for the first time and my 5 papers are exam. So is there any problem if I study the subject directly? No problem. A lot of students deliberately choose FM as their first paper. You are in a safe zone. So don't worry anything. I will be explaining to you, I'm indeed explaining everything as if all of you are studying FM or any other math paper for the first time. So just don't worry at all. Okay, so trainings from VGLD is done. Your subject area, as in from the book, question practice, and from the notes we will study. Then we have ACCA Study Hub as well. Okay. Murtaza, no other publication. I have already done the simplification work in my notes, so you don't need to refer any other book. Just refer to my notes and the questions in the book. It should be fine. I've made it comprehensive, so you'll not struggle. Okay. So now I need to show you two things on the browser. I'd request if all of you are joining in from your computer, you also do it along with me if you're not aware of what the ACCA Study Hub is or what the CVE practice platform is. So, Saujanya, book is shared by the admin team. Whoever is handling your registration process, just please reach out to them. They will hand you your books. Okay? every note, everything. So I don't share anything directly with the students. I share it with the admin team. They upload it on the LMS. Okay. Now, all of you, open your browser and follow these steps along with me. First, let's go for ACCA Study Hub. This is the first link you will get. Okay. You need to click on this. And if you scroll down, you will see a link here, alternate login. Okay. If you click on alternate login, you will see username password. You'll have to enter your username password. I hope all of you have got it. If you have not, just make sure you get in touch with the admin team. They would be able to give you a login ID and password. Okay, and it's very important. Anything and everything on the ACCA portal will need your username password, right? So if you already have it, you can try following the steps along with me or just watch it. It's very simple. Now, if you go to the not yet started tab, okay, for me, it will be showing on my dashboard because I think I've started it already. 1 second, I'll just check. Yeah. This type of a tab you would be seeing on not yet started tab. Okay, those of you who are following the instructions along with me, please check. You will see this tab on not yet started section. You need to click on study. See, FM. September 25 to June 26 attempt, FM. You click on study. So once you click on study now, forever now it will come on dashboard. So you don't have to search it so much in the not yet started tab. It will start showing in the dashboard on top itself. So you will see that there are different chapters, 19 chapters, which is also the same as the chapters in our curriculum. You will be seeing that here. So this is the detailed content which has been published by ACCA. Okay. You don't need to refer it because I'll be giving you my notes, which would be sufficient for you to cover the syllabus. So this is not needed, but yes, just to apprise you that there is something like ACCA Study Hub where ACCA also publishes its content, right? Then you have flashcards, a good tool to remember keywords. See, I'll show you. If you click on view list, total 76 cards are there. So term and its definition. Okay, term and definition, corporate governance, the system by which companies are directed and controlled, monetary policy, fiscal policy, all of these terms you're going to learn. So these total list, you can take a printout and put it on your study table. Anytime just passing by, you can have a look at some some of such keywords because, see, understand, you are going to be having objective test questions. So it will be very useful if any of such term comes and you get an you get an instant recollection of what it means. Okay, like supply side policies. These are all important terms. So this is something you can do. Just click on print. You'll be able to take a printout of this and put it on your study table. If not, if you don't want to print it out, you can save it as a PDF as well. Then you have a quiz section here. So there are chapter-wise quizzes. There are chapter-wise quizzes. So total, let me show you. 5 questions per chapter. Okay, so which Islamic financial instrument involves a bank voluntary paying its customers a gift? So, for example, this is Hiba. You may not know it. I just putting my answer. Okay, supply side government policy. See, I just showed you the supply side policy is a keyword. See, it got used here. If you know the keywords definition properly, you'll be able to answer it. I'm just randomly selecting for the timing to save time. Okay, then this way read, solve, and if you get stuck anywhere, any term that you're not able to recall, just go back to its notes and memorize it. So done. Once we are done, you will be able to see that out of the 5 questions, I got 3 right. I was randomly selecting only. So 2 of these are wrong. Now I want to see what are the correct answers. I click on review all and I'll be able to select the and see the answers here. Okay. So the correct answer is D. HEBA represents a portion of the profit made by using the savings account balance in the other activities. Like that's what they have given you the explanation. Supply side policy, the correct answer is C. And the reason for it, the justification for it is given to you. In this way, wrong or right, whatever, you will get the correct answer with their explanation. So this is something you can do once a chapter is over. Okay, you will get such chapter-wise quizzes. So once any particular chapter is done in the class, you can just go back and practice its quiz. Then you have the practice tab. This is not needed. All the questions are covered in the book. So you don't need to practice from this part. This won't be needed. Okay, and that's all. Search is for searching the website. It's not needed. So this is all about the ACCA study hub that you should be aware of. Okay, what you could use is flashcard and quiz section prominently. Now let me show you the ACCA practice platform. You will see this link, past exam and question practice. So click on this. And if you scroll down, you will see this login to the practice platform. Click on this. Again, login. Okay. You may not see something over here. I've already assigned some exams to myself, so I'm seeing this. For you, it may be blank. What you need to do is click on this. Have a look here. Browse available exams. Browse available exams. If you click on this, it will load here. You need to select the paper first. So we are choosing financial management. Right? Click on this. And all the papers available for the FM paper would start loading here. One second. So you will see so many papers over here. specimen exam, practice exam, previous past papers, okay? September, December 24, 23, 22, then March, June papers of 24 and 25. Then blank workspace is nothing, just you will be able to access the answer options here. And this is pre-September 2025 mock. Okay. So in this way, you can see that a lot of papers are available for your practice. Past papers, past papers do not contain section A and B questions. Let me clarify that. Practice exams would have some questions from section A and B, but the past papers, they do not publish uh, your section A and B category questions. Okay. Now, these questions would be really, these paper practice would be really helpful to you just immediately before the exam. Because in just some time, I'm going to tell you about the preparation strategy you should be having throughout the next 2.5, 3 months. So there it will be very useful. So what you have to do out of here is you can practice exams. Now let me take up any practice exam. Let's assign this pre-September 25 mock. Ma'am, what is pre-September 25 mock? Before every attempt, like for you, it would be December attempt. Before December attempt, a paper will be assigned to you here in the same place instead of, so this will go away. Pre-September 25 mock will go away, and in place of that, December 25 mock will come. And you'll be able to practice this paper fully. Let me show you how it looks like. So if you click on the assign button, so this is already assigned. Let's assign something else. FM practice exam 2. Okay, it will show me a pop-up assigned. Now, if I go to this view assignments, scroll down. Okay, and I click on start. Are you ready to start? Yes. It takes some time to load. So I uploaded such videos to help you in your ACCA journey on my YouTube channel as well. Goes by the name Anushka Jain, CA and ACCA. You can consider subscribing to it to get such videos in your feed as well. Let's wait for some time. I think it's running too slow today. It's loaded. So you can see introduction given to you for the exam. That's 3 hour time period and all. Now you're aware of this, so let's go past it. Click on next. See, this is section A category questions now. I'm giving you a walkthrough of the questions as well so that you uh, understand the variety of questions that can come. So this is a simple MCQ type of a question. You have to select one of the 4 options. Done with it. Click next. Now there's a trick I'll tell you here. I'll just go back to the previous question. Do you see what is the shape of this circles? And here was anything specified how many options you have to select? Nothing. Remember this, if it's a circle and nothing is specified, it means you always have to select one option, okay? Only one option would be correct. Now I just move to the next question. Which two of the following? And you will see the shape has changed. It's now square. You get the option to select 2 options. You can select all 4. Of course, it will be marked incorrect, but you can select 2 options here. But if I just go back to the previous one, even if I try selecting, it won't let me select. See? Just keeps changing. Okay? Ma'am, I selected 1 out of the 2 correct options. Will I get half marks? No. Either you get full correct marks or 0. There is no half mark in section A or B. Are you able to follow me? There is no half mark. Either it is correct or not correct. So either it is 2 or it is 0. There's no 1 mark, 1.5 mark, nothing like that. Okay? You have to select both the options correctly to score marks or else you get 0. Let's move to the next question. See, what is the theoretical X rights price per share? So you have to type in the number here. Let's say 12. Dollar is already written outside the box, so you don't need to write dollar again. Okay, see, the input does not match the expected format. Why? Because it says up to 2 decimal places. So I have to, even if it is nothing, it's just 12, I need to write down 12.00. Okay, click on next. Now it will accept it. Now, true false category question. You'll have to select. Now, ma'am, all 4 have to be correct to get the marks? Absolutely. If even any one of them is wrong, you will get 0. So that is the level of, confidence you need to have in your answers. Then see this. You have to select from the drop down. Okay, randomly selecting it for the time being. So, selection from a drop down list. Then selecting 1 out of the 4 MCQ category question. You can see variety of questions that can come. Again, this is MCQ category. Fill in the blank category. Again, see, up to 2 decimal place. I need to fill in with 00. Select one of the options. True, false, correct, incorrect. Correct, incorrect is nothing but true, false category only. Okay, so these are the possible categories. Now comes section B. As I was telling you, there will be 3 scenarios, 3 objective test cases. Each scenario will contain 5 questions. Let's see. This is a scenario. On the left-hand side, what you see, it's a scenario. Okay? And relating to this particular scenario, you will have 5 questions. You will have 5 questions. See, this is question number 16 over here. You can see the question number here. Total 37 questions will be there. And this is the 16th question. So, what is the future value of the dinar receipt? You are going to be learning all of it, don't worry. So, let's say I'm randomly selecting this. Ma'am, do all 5 answers have to be correct for me to score mark in a scenario? No. Individually evaluated. Okay, 2 marks individually will be given. Then, see, the scenario is not changing. It's the same park company scenario. You need to select the options here. Okay. See, scenario is same. It's not changing, just the question is changing, and that would be up to 5 questions. This is question number 3, then question number 4, question number 5. Okay. So, in this way, you get 5 questions per scenario. Okay, 5 questions per scenario. Then, see, now the scenario has changed. This is question number 21. And you see, there is a new scenario. New scenario with new questions. See, objective test format of the questions is same only now. Fill in the blank type of question, true and false, match the following could be there. So this is how you can expect the layout of the questions to be. I'll just get past it now. Ma'am, do I have to just keep clicking next and next to go to a particular question? No. You have the navigation option as well. Here, see, navigator. Section B, category questions is what we are seeing now. Let's say I want to move to section C. Okay. Section C will have 2 constructed response questions. Now, this scenario relates to 3 requirements. As I told you, it's not specified how many sub questions could be there in a section C question. So here it has got 3 sub requirements, and any split of mark could be there. Now, see here, part A is 11 marks. Right? This is the scenario given to you. And using this scenario, you have to solve. Let's calculate the market value, weighted average cost of capital. Then, if I click next, explain the meaning of the terms business risk and financial risk. So, did you observe that when you had to calculate something, they gave you an Excel, the spreadsheet function. And when you had to explain something, you had to write something, they themselves gave you the word processor option. So, you don't have to exercise any choice here. This is how it will be given to you. Again, this is also discuss the key features of a rights issue. So you have to write the answer in word processor format. Now let me show you some functionalities of the spreadsheet. It's a very, very basic spreadsheet. Your tools which will work are simple. You know what you need, you will learn in the class, okay? So let's say I press sum. I need to sum it up. Okay. 6, 7, 8. I copy, paste this. The formula gets dragged. You know, the drag option of Excel, that works. So the basic features of Excel will be working here for you. You can cut a number, paste it somewhere. Okay, cut, copy, paste, all of that works. Control C, Control X, Control V, all of that works. Then you have the option to make something bold. Let's say A, B, C, D. If you want to bold this, select it, press Control B. It's not working here, but it will work in exam. This new platform which they have launched, so just I think 15-20 days back they have launched this new platform, so it's not working up to the best possible way, but it will work. So you can press Control B on your keyboard, it should work in exam, and I'm sure they will correct the platform also in some days. So you can otherwise click B over here, it will work this way. You can do Control I for italics also, Control U for underline. So these functions are available. Then you have the function to fill cells with any color. If you want to highlight particular cell, maybe in your answer when you are done, you want to highlight that, okay, this is my final answer. Maybe you want to put it in green color. You can do that. But at the same time, don't spend a lot of time in just formatting stuff. It doesn't give you extra marks, but yes, if you want to highlight something, you can use these things. Then you have the feature, like if you want to write something in percentage form, let's say I want to write 80%. So you can just directly use shift and 5 together, you get the percentage sign, or else it is available here as well. Okay, but I would suggest using the keyboard. Uh, that would be better. So that is percentage. Fraction won't be needed, but it's available if you want to format something as a fraction. And this is your, I mean, font size if you want to change it, but I don't find it useful. You will not need to change the font size. But again, options are available. Can you resize the columns? Yes, you can resize. Okay. You can just double click if you want to auto fit the content, or you can drag across. It will change the width. Or you can, width or the height of the cell that can also be changed. Ma'am, can I delete or insert new columns or rows? No. Insertion deletion is not allowed. Okay. You can just resize. That's possible. Let's say I want to write a long sentence. Today is a good day. Start. Okay, I type this. So, for example, if there is a need, let me just show you that this feature is available. That I can change the width, right? So I want to format this in this particular cell itself. So if I click on format cells, see, have a look here. Format cells, go to alignment, you click on wrap text. Okay, press scroll up. It's not functioning, but I hope you know what wrap text is. The features are not updated correctly, properly till now. So this will get wrapped in a particular cell. So this feature is also available to you. Don't worry about it. For exam, it will work. They have launched this platform newly, so it's not functioning properly. But then this feature is available as to wrap the text. And anything else? This should be enough for you. If you want to do some border formatting also, that is available. Again, not very useful because anyway, cell borders are here for you. So why to waste time unnecessarily on creating borders again? So not very relevant. Is it clear, everyone? Yes, perfect. Huh. Now let's move to the word processor answer script. So this is the word processor answer script. Now let me show you a couple of things. You can copy paste. You can copy paste in Excel also, not just specific to this. I'm just showing you that you have the feature to copy paste from the question. So I've selected something and I'm pressing Control C on my keyboard. If I press here Control V, see, it pastes as it is. So a lot of times you may need to copy some data from the question in your answer script. So this is something you can use. Okay, Control C, Control V. In fact, within the question also, let's say I want to copy this, paste it here. So this is also possible. You will be able to save a lot of time. In fact, I'll only tell you just copy paste and just change the numbers, your answers will get updated. You save time and you're able to solve quickly. Okay. Now, similar to the three functions over there, here also you have, see here, Control B is working. It will work in Excel also, don't worry. It's just that the platform is not working properly. So you can press Control B. I'm pressing Control B on my keyboard to make it bold. Then Control U for underlining, Control I for italics. Okay, so if you want to highlight something, you can make use of these features. Then you have the option to insert table. A lot of times, you will have to present data in a tabular format, and I'll tell you when. So you insert tables like this. Okay. Mostly, what I suggest to the students is when you are writing answers. So, for example, explain the meaning of the term business risk and financial risk. What I would have done is I would have inserted a table with two rows. Okay. Business risk. Either you can write in two paragraphs. That's also fine. Or you first explain what business risk is. Okay. And then you write down the meaning of business risk. And then here you write down financial risk and write down its explanation in the right hand risk. The risk due to the capital structure of the company. So in this way, you can write down the explanation. When you write in such tabular format, it becomes very easy for the examiner to understand what you have written where. So instead of writing in disguised form in long paragraphs, you can consider writing in such tabular format. It will change the length of the cell will also update automatically. See, just look at this. You don't have to. You just keep typing. The formatting will take care of itself. You can just drag and change the width of the column. That is possible. Okay. So Control Z is there. You can do Control Z, Control Y, undo, redo option basically. Then your find option is there, but not very useful for such a small text. What will you find and what will you replace? Then superscript, subscript option is available. Not very useful. So for example, I want to write equity beta. You will learn all of these concepts. So equity beta, I want to put E in the subscript. So I can select this E and click on this. It will put it in subscript. But again, no point in wasting time in selecting it, small letters and doing subscript, superscript. Even if you write BE normally now, that's fine. Okay, so that's why I'm telling you, not very useful feature. Again, it is available too, so I've shown you. Okay, and all these are table functions like delete table, table properties, insert row. You can insert row, delete row to such tables, but not in Excel. Okay. So that's all about the Excel, the word processor answer sheet. If you click on next again, Gardner company only, and it's a 5-mark question. So total 20 marks get complete here. Now next scenario will come. So this is a this is a new scenario, Dixa company. New question. And see here, 8 marks Excel based question. Calculate the NPV. Then here also this is another Excel question. So this way, they will give you Excel where you need Excel. They will give you word processor where you need it. Okay, here there were 4 subparts. Small questions were there, totaling up to 20 marks. This is how your question paper would look like. All the sections, section A, B, and C. Once you are done, you click on next. They will show you a summary of all the questions. If you have attempted something complete, incomplete, unseen. I left some questions unseen also. I just moved to the navigator, right? So they have given you a summary. If if I want to appear anyone again, I just click on that particular question. It will make me land on that one directly. So that is something you can make use of towards the end. When you are done, click on end exam. Only when you are done, do it. Otherwise, you'll not have to get back to the exam. So click on end exam. Are you sure you want to end? Yes. Are you sure? Again, it is asking you. Even if you click no now, you'll be able to go back to the exam. But be very careful with the end exam button. You won't be able to restart your exam if you are closing the exam. So are you sure you want to end the exam? Yes. So exam is done. Submit it. Now on the practice platform, you are able to see the answer to the questions. Okay. Now see how you can see the answers. Here earlier you were seeing start button, right? In the same place, view assignments. If you just look at your assignments here, you get FM practice exam to mark exam. So now I'm showing you how you can view the answers. This you won't get an real exam, okay? This is just on the practice platform. So click on mark exam. Are you sure you want to mark? Yes. So what it does is, out of the 60 marks, which is your objective test paper, now it gives you the score. So I was randomly selecting, something got marked correctly. So I've got 4 out of the section A and B questions. And it's not coming here. One second. It should have come here. It's not showing. Let me try for another. It's taking too much time to load. The answers should be coming here in the marking guidance. Okay. You will get the answers here. So, which two of the following activities are carried out by a financial intermediary? So, you'll get the answers on this side, what the correct answer with the explanation. You'll get it here. Okay, let me show you for some other questions. Wait. See, this is what I wrote. Okay, this is what I wrote. And on the left hand side, this is the answer which is being given by ACC, what the standard answer should have been. So business risk and financial management relates to variability of shareholder returns which arises from business operations. Okay. And then financial risk, it arises from the way in which the company finances itself, that is from its capital structure. In this way, they have given you the model answer and how many marks each of these subparts are carrying and which the examiner uses to give you marks. Okay. So in this way, it's not loading for some of the questions, but you will be able to see the answers to all the questions in this format. Calculate the NPV of the investment project. Here also, you will be able to see the detailed answer. The platform used to be good earlier. Now they've made it just too heavy. It takes too much time to load. See, NPV calculation. In this way, they have given you the calculation. Okay. You can see the marking scheme here if you press the right arrow. So that is all about the practice platform. In this way, you can see the answers to all the question papers. Okay, so that is available for you. Any doubts here, anyone? No? All right. It won't show the reason behind the answer. So they are actually building up this platform, it seems. Sometimes they do show you the answers, sometimes they don't. Actually, this is something even I'm struggling with. The platform that they have updated, not showing the answers properly. Like for this one also, like it's just taking too much time. Let's see if it is giving you the answer or not. But there is some challenge. It's not fully, completely functional till now, Harshita, you're right. But I hope over the course of some days they will also correct it. But nevertheless, yes, there is scope to see the answers here. I hope it gets corrected with time. Okay, moving on. Next question is, will we get result instantly after submitting? No. Your results will be there. So, like, let's say if you give the exam in December, you will get the result in January, middle of January. Maybe, it's the first, the Monday over there, 14th or 15th type of date. On a Monday, you will get the result, not immediately. For knowledge level papers, you get the results immediately. Also, the roll-up score won't show correct marking. Yeah, it's not properly synced till now. Not working. You're not able to actually see which mark is getting added where. It's all blank here. Okay, let's just hope it gets corrected over time. Anyone who has used the previous platform, you will be able to understand what I'm talking about. The earlier platform used to be very smooth. There are a lot of glitches in here. Yeah, right. Right. Well, finally something has loaded up. Seems. See, finally something indeed came out of it. So this is the correct answer. Which two of the following activities you have to select? And yeah, no more reasoning is being provided. I'm sure it is there in the back end. It's not just showing in the forefront. But earlier, what they used to give you the reasoning also for all the answers. See how much time it has taken just to load up the this much of the screen. So it's very slow. And I'm sure the reasoning which you're talking about now, Harshita, which used to come in the platform earlier. So it is there in the backend. It's just that it is not developed properly, and therefore all these glitches that we're seeing. So much time to load a particular answer. How much time will a student give, right? So there are some problems. Okay. All right. But anyways, you will not be needing it as much right now towards the exam, and mostly you'll be using it for the market paper. So answer would be visible to you in here. All right. So let's move on. So these are the study resources that you should be using. Now let's come to the preparation strategy that I was talking about, that you need to follow. See, we will be having classes over the weekends, mostly Saturday, Sunday, There would be some practice sessions, mostly to discuss your doubts only, which I would schedule with some discussion during the weekdays, but it will be early morning, so all of you can join during that time. So early morning, 7 a.m., 7 a.m. to 9 a.m. types. We will keep some practice sessions just to accommodate the doubt sessions. Okay. So mostly the classes would be on weekends, right? So your classes could be going on till November. Now, ma'am, should we wait for the classes to get over and then we will start our studies? Nothing like that. Please never make that mistake. You will just be in a soup if you do that. What you should do is after every chapter is complete in the class, in the week following that, practice all the questions from the backside of the book for that chapter, revise the notes, and revise the activity questions which we do in the class. Okay, so it has to be like a comprehensive all-round revision of that particular chapter once it is done in the class. Okay, and then there could be some weeks when no chapter is complete. That is also possible, or you are able to complete a revision very quickly. So you should start doing a rolling revision of the earlier chapters which you have already revised. So in this way, you have to complete 2 rounds of revision of the content of the chapters by the time the syllabus is done in class itself. So I'm calling it revision. Why? Because learning part you're doing in the class itself. So when you go back home, it's just to redo what we have already done. Everything will be done in the class. I'll not say anything. Okay, do this in your home. Do that in your home. Question practice, of course, you'll have to do at home. Otherwise, all the topics will be covered in the class. So you'll just be revising at home. Okay, so 2 rounds of revision will happen along with the classes. Okay. Yes, absolutely. You should attempt the exam in December. That's the best time. When you have studied freshly, everything will be there in your mind. I'm telling you, my words will start ringing in your ears by the end of the sessions. So give the exam in December. A lot of time between the classes and the exam, it's just, memory starts to fade. That's natural. So all of you should try and aim to give the exam in December attempt itself. Okay. All right, coming back. So what you have to do is 2 rounds of revision. Ma'am, how will we do that? So as I told you, first round, immediately after a chapter is over, do 100% everything about it. Entire notes, entire questions, all of it. But when you're doing such revisions, you should keep marking the questions which you will want to redo, where you made mistakes. See, out of the 100 questions that you practiced, it is possible 20 you were able to do correctly. They were very easy. So you may not want to give a lot of time to it again. So what you should do is mark those 80 questions. That okay? Some symbol, whatever I'm sure you all are studying, so you will know some symbol you can give for that. Okay, I want to do this again for the second round. Then for the second round, out of these 80 questions, again it is possible you made mistakes in some of the questions. Maybe again 25 questions you made mistakes. Or 25 questions you did not make mistakes, rest you made mistakes. Whatever, it's okay. I'm not setting any ratio that okay, 80% has to be correct only. It will matter, it will change from person to person. So in this second round, again, you will mark those questions which you will have to do again. And that will be your third and final round of revision, which you will do after the classes are over and you will get those 10-12 days to yourself for complete self-study. So it is during that time, you will sit down, you will do all the question practice. Okay. So that's about the revision strategy. 3 rounds of revision we are doing. We are keeping just one source, VGLD book, and my notes, which I'm going to give. No other publication is needed. I'm telling you, it's going to be more than sufficient for you to pass the exam. And lastly, before you go for the real exam, you have to give 3 mock papers. Now I showed you that pre-September mock for your exam, pre-December mock will come up. So you have to give that. And 2 more papers, specimen exam, practice exam, you can choose and you can appear for those 2 papers. When you follow this, practicing of mocks before the exam, there will be no surprises for you in the real exam. It could be with respect to time management, a lot of things which you experience only during exam preparation, those random questions coming together. So all of that gets practiced in mocks, and you are all set for the real exam. So that is the strategy which you have to adopt. 3 rounds of revision of the content and 3 mock papers. That should be enough to help you pass the exam. For questions, we can use VGLD book and study hub, but not use. Nothing else is needed. Question practice we'll do from the VGLD book. Okay? Study hub, if you want, you can practice the quiz questions. All right. So these are the top resources that you need to know to pass the exam. Now, skills required. So all of you, when you join in for the class, please log in using your laptop or computers only. See, when you watch something over mobile phone versus when you sit down properly against your laptop and, study, you will see the difference in your preparation itself. So all of you, whenever you log in, please next class onwards, next 1 or 2 class may be theoretical, but still try to join using a laptop and practice the questions on Excel or Word. So when you practice on Excel and Word, now your expertise on computer-based exam will improve. Otherwise, all of us are accustomed to writing with pen and paper. There's a change since some of you are going for an exam for the first time, all the more for you that you write, that you practice on Excel and Word. Okay, so that's a pre-requirement that you have to follow. The second one is specifically for section C answers, that when you write your answer, a lot of times I get queries from the students, ma'am, how much should I write? See, there is no length which ACCA says that, okay, for a 4 mark answer, a student has to write one entire page or these many words. Nothing is specified by ACCA. So with experience telling you, it is quality which matters. But how is that to be assured? If it's a 4 mark question, okay? So like we saw, explain the business risk and financial risk. What you can do is, so it's a 4 mark question, business risk, finance risk, 2 mark each. See, that much awareness you should have in your mind, okay, that if explain business risk and finance risk is for 4 marks, business risk would carry 2 marks, finance risk would carry 2 marks. Now, within those explanation, you can write about the definition. You can maybe give some example to help you explain the point. So that is to be done. So one idea per mark, quality over quantity. So what you should aim for is 2 sentences per mark. 2 sentences per mark. Short and sweet. It's not like I'm talking about long, lengthy answers. 2 sentences to elaborate on each idea. So if it's a 2 mark question that you're writing about business risk, 3 to 4 sentences should be more than sufficient. Now, when I'm saying sentences, now please don't be childish anymore. That my name is Anushka, people call me Anushka, I am known by Anushka. That's not the type of answers you have to write. You have to write good quality, answers. Do not make active voice, passive voice type of answers. Good quality answers where you are able to explain a particular point to the examiner. Okay, so it's quality over quantity. As I told you, the expected length, 1 to 2 sentences per mark should be fine. Just be able to prove the point that you want to make and support it with some justification if needed. Depends from question to question what type of question you're solving. So you might have to give some justification. So accordingly, draft your answers. This you will need to develop over time. When I give you questions for practice from the backside, don't just practice the practical questions. Write down your version of the theory answers also. Now, what you will all do is, listen to me carefully. For each chapter, create a separate Excel file. Okay, just like I am creating separate Excel files for chapters, you also do that at your end. So when you are studying, so any question that you practice from the backside, it will carry some theory questions also. Write down your answer to it first in Excel or Word, whatever you're comfortable with, write it down. And then match your answer with the book's answer. Highly likely your and book answer will be completely different. That's okay. But try to now observe the points which you could not even think of. Or maybe your points were right. Maybe you did not elaborate properly that, okay, I could have written more about this. So when you start making such comparisons in your answer versus the model answer, slowly, gradually, you will move towards good quality model answers. That's the whole objective. See, I can explain you a topic, but how you have to write, you have to do that with practice only. Every question which you will see, it will be covered in the class. The topic would be covered. But how to draft it in the form of answers, I can only guide you. Again, you have to practice for that. And how to practice that, I'm telling you. Write down your answer, compare it with the model answer, and see the points of improvement. This you have to do for yourself. Okay? And you will see the improvement in your answers. I have personally seen the improvement in the answers in the classes itself. So I'll also give you some questions to solve. So when you solve and send in your answers, I can also see the quality of your answers, right? You will see that improvement happening over the classes also. But for that, you have to put in your hard work. Okay? So because section C is very important, it is carrying 40 marks. You need total 50 marks to pass. So it's not like you can just go for section A and B out of 60. You think you'll attempt and get 50. It will be very difficult to pass. You need to score good marks in section C as well. So practice properly. Then use headings and paragraphs. When you write down your answers, write down in small paragraphs. Don't write in a long prose. It just becomes too boring for the person to read. So write in paragraphs and give headings to those, subheadings to those paragraphs. If you're doing some workings, when we will be doing investment appraisal chapter, we'll be doing a lot of workings. So you need to label and cross-reference those workings so that the person understands that, okay, this working has been done here and there. Rule of elimination and objective test questions. Very important. A lot of times, you will not be able to, give a confirmed answer to a question, and that's okay. It happens with everyone. So instead of leaving a question, you should follow the rule of elimination. Ma'am, what's that? So you see 4 options. It's not like you will be confused between all 4 options. That okay, all 4 could be correct. A lot of times you're just confused. You're confused between maybe 2 options or 3 options. So try to eliminate the incorrect options first. If you're getting confused, if you're confident, select the correct answer. Be done with it and move to the next question. In some questions where you may be confused, try to eliminate the incorrect ones and then make a choice between the available options. Okay, so that is the rule of elimination you should follow. And you'll learn a lot of different formula in class, so you have to use that. See, I'm telling you, nothing that will not work in your practice platform, I'll teach you. Whatever I'm going to teach, it will work in your practice platform, tried and tested. So use those formula in exam as well. Okay. So these are the pre-skills which you should have or develop to pass the exam. Okay. Now, time allocation, very simple. It's a 100-mark paper with 3 hours time, so 180 minutes. So 180 by 100, that is 1.8 minute per mark. So accordingly, you should do the allocation. What I suggest is not to allocate time on a question basis. And there's the reason why. Because some questions, they tend to be lengthy. Some questions, they are very short. So to overall, you should balance out the times at a section level. That okay, section A has got 15 questions, 15 into 2, 30 minutes, 30 into 1.8, 54. So section A total, you should give 54 minutes. Now within it, if question 1 takes half a minute, question 3 takes 1.5 minutes, that is fine. But overall, section wise, you should manage within the allotted time. You should not exceed the time beyond it. Because if you do that, you're eating away the time which you could have allotted to some other question and scored marks. Because it's not like, no, if you give extra time, you will get extra marks for that particular question. It's not like that. So therefore, you should give each question its due time, and that time management, it's very, very crucial, I'm telling you. Lot of times students, they just come back and tell me, ma'am, I knew the answers to all the questions, but I was not having the time to do it. I don't want you to be those students. Manage your time, and manage it at a section level, not at a question level, because there would be some questions. Even while we are solving now, you see some questions and ask me, ma'am, this is for 2 marks. I'll be like, yeah, because some other question which they will give you in the same section will hardly take you 10 seconds to solve. So you have to balance it out. Okay? So that is about time allocation. So that's about the orientation. Now, some basic things which I want to discuss with you. This you would have studied in your class 5, but again, we'll also cover it in class. Quickly, round off these numbers as per the instructions given here. Round off these numbers quickly. Round it to the nearest dollar. 432.11. What will you put in the answer box? Put it in the chat. What will you put in the answer box? Or if you be quick. 432? Absolutely right. Round it to one decimal place. What will you put in the answer box? Round it to one decimal place. Be quick. So one decimal place, look at the number immediately after that place. It is 5. So 5 and above, you need to round up the number. So what you will put is 432.5. Okay? Here, round it to one decimal place. Look at the number immediately after the respective place. It's 1. So it will be rounded down. It will become 432.1, 432.4. Then round it to the nearest $100. $100 will be what? Here. So this is 3. What will you write? 4,500. Okay. Round it to the nearest $1,000. So look at this here. It is 7. So it will get rounded up. Right? 5 and above. So it will become 57,000. Then round it to the nearest $1,000,000, but write in millions. Write it in millions. See? 3 places. Then 6th. So 32.7 million. What will I write in millions? I need to write in just 33. Okay, I see a lot of you got it right. Well done. I hope it is clear. Anyone having any query in any one, let me know. If you didn't understand anyone, let me know. I didn't get the second question. So round it to one decimal place. See, you have to write up to this place. Look at the cursor very slightly. You will be able to see 432.4 cursor and 5. The number after the cursor is 5. 5 or above, you need to round up the number. So this 4 will get rounded upwards by 1. Therefore, it becomes 432.5. And just below it, if you see, it is 432.41. Here it is 1. So therefore, I did not have to change the rounding. It got rounded down. Okay. Then, in the fourth one, nearest $100. See, lot of times when you're talking, what do you do? Okay, I have to pay you. For example, I have to pay you $4,532. Okay. So you say, okay, you pay me $4,500. We say, no, we just round up to the nearest $100 and we say, okay, you pay me $4,500. We are done. So we are doing what? Rounding to the nearest $100. So $100 will be what? This is 100. This is 4,500. So this number is what? 3. And this number is what? 3. What will I do? No rounding. If it was 7, for example, then tell me what would be the answer. I'll have to round up. I have to answer in hundreds. That's clear. But this will become 4,600. Sorry. Is it clear now? So 4,572 got rounded to the nearest $100 as 4,600. And if it is 4,532, it gets rounded as 4,500. To the $1,000. Look at the thousandth place here. See, it is 7. So I need to round it because 5 and above you round up. So therefore it is 57,000. And in here, you have to write in million. So maybe the answer box will give you M outside the box. So you just have to write 33 million. Is it clear now? All 6? Let me know if still there's a doubt, okay? All right. Now, there was this rounding of concept. Very simple, but see, I'll tell you what happens. If you don't round properly, you lose marks. That's why I'm discussing such pacing things also. I don't want you to lose silly marks. Right? So round up properly. Now, again, some basic concepts. Markup as a concept. The term markup is applied on cost. Okay. The term markup is applied on cost and margin as a term is applied on selling price. Okay. So look at the first 4 examples here. Cost is 100, markup is 20%. What is the selling price? Quickly, fastest fingers first. What is the selling price? $120, right? Ma'am, how did you get 120? See, all of you pay attention. I know it's a very, very basic thing, but something that you're going to do forever from now onwards, if you're not doing already. So one way to calculate selling prices, first, you calculate markup, which is 100 into 20%, 20. And then you add this 20 to the cost, 100 plus 20. Can I say this is nothing but 100 plus 100 into 20%? Can I write it as 100 common and then open bracket 1 plus 20%? So this is the approach we are going to be following from now onwards. We don't first find out a number, then add it. We just directly multiply it with the factor of the percentage. So it is 100 into 1 plus 20%. Please observe this carefully. I'm telling you, it happens every batch. Then, ma'am, how did you derive this formula? There's no derivation. It's a very basic math I've done here. When you have to calculate selling price, you just directly do it like this: 100 into 1 plus 20%. When the percentage is applying on the cost itself, markup as a percentage applies on cost, so I can do this. 100 into 1 plus 20%. So the selling price is 120. You will not follow this approach. First calculate markup, then add it. Not like that. Directly use the factor. When you add or deduct 1 to the percentage, it becomes a factor, okay? So the selling price becomes 120. Now let's try example 2 on your screen. Selling price 100, margin 20%. What is the cost? Fastest fingers first again. Tell me. 80. Correct. So you can directly again here also do 100 into 1 minus 20%. Okay, 100 into 1 minus 20% because you'll have to reduce it. Now, example 3 and 4 on your screen. I'll give you 2 minutes to solve. And here, send in your answers when you're done. Selling price and markup is given. Cost and margin is given. Now you try to tell me the answers of. Here you have to answer what is the markup. Here you have to answer what is the selling price. Don't rush into it. You might make a mistake. You have to here give me the markup. Please answer correctly. Markup and the selling price. Giving you 2 minutes. All of you, please solve and send in your answers. Let's see what you're getting. Okay. Now I'm going to teach you a very, very important concept that you're going to find useful not just in FM paper, in a lot of papers, and not just at the skill level, but the professional level also. So, see, the concept is given value divided by representative multiplied with requirement. See, all of you have done this by assuming something as X, okay? But here, you have to assume a value to be 100. Ma'am, why? So we can do everything by X. X will not work in Excel. X will not work on your calculator. So therefore, we need to assume a value as 100 and do just everything as it is how we have done in our class 5. So here, markup is given. Markup as a percentage. Applies on what? Cost. So step 1, everyone, 100% attention here, whether or not you got the answer correct. Just listen to me carefully. Whichever value the percentage is applied on, markup as a percentage applies on cost. So whichever value the percentage is applied on, assume it to be 100. So let the cost be 100. Then markup will be what? 100 into 32%, which is what? 32. And then the selling price would be what? 132. If cost is 100, selling price would be 132. Now, what is the given value? Okay, I'll change the given value. Let's say it is 600 so that you don't get confused with all the hundreds. I'm changing the number. I've changed 100 to 600. Okay. So given value is 600. Selling price. So what you have to do? Given value divided by its representative. What is its representative? 132 into the requirement. What is the requirement? Markup. So into markup. Okay. 145.5. I've changed it. I can make it 100 again. It's just that too many hundreds would be there on the screen. I don't want to confuse you. Whatever value the percentage is applied on, assume that to be 100. Then find out the representative of the given value and use this equation. Given value divided by the representative multiplied with the requirement. Please take a look at the solution. Let me know if it is clear. All of you. So this is the approach we are going to be following from now onwards. And this will come handy in a lot of questions. Okay. Now, similarly, let's take a look at this. Again, this also 100, changing this 100 to 600. Cost is 600, margin is 29%. You have to find out the selling price. Margin as a percentage applies on what? Selling price. So what you do? Let selling price be 100. Let selling price be 100, then margin would be 29. So cost would be 100 minus 29, that is 71. What you have to do? Now you have the representative of the given value, which is cost. So given value is 600 divided by 71 into the requirement. Requirement is what? Selling price. So into 100. Given value by representative multiplied with requirement. Please take a look at both of these solutions. See if you're getting any doubt. Example 3 and example 4. Step 2. Sure. See, I'm repeating the step here. All of you, please pay attention. This is something you have done using X. Okay, when you assumed now let something be X, then markup would be percentage of X. That's something we are done. It's just that I've tried to put it in the form of a formula that you can remember forever now. So what we did, first of all, whatever percentage, I'm repeating both the steps, listen to me carefully. Whatever value the percentage applies on, you assume it to be 100. So in here, let cost be 100. Why? Because markup as a percentage applies on cost. So let cost be 100. In that case, markup would be 32. See what you would have done. Let cost be x, then this would be 0.32x, then this would be 1.32x. Then you would have solved 1.32x equals to 600, right? Then x is equals to 600 by 1.32. Then you would have solved for the markup, which would be the difference. Okay, mark this would x is what? Cost. So markup you would have found out as 600 minus 454, 145. This is the series of steps you would have taken if you assumed it to be x. But as I told you, no longer you have to do x's and all. You'll be doing it using 100. So what I did is I got that if the cost is 100, selling price would be 132. Then what we do is I have a given value. This was given to me in the question that the selling price is 600. So given value divided by the representative. What is the representative here? 600's representative is 132. So 600 divided by 132. What is the question wanting me to calculate? Question is asking me to calculate markup. That is the requirement. So multiply with requirement. That's the second step. So this is the only formula which you can use anywhere and you will get your answers correct. Never will you make mistakes in ratio proportion. I'm telling you, this is something that students always keep struggling with. No longer. Is it clear now? Still there's a doubt, please feel free to ask, nothing to shy. Observe the formula, see if you're getting any doubt. How cost became 71 in example 4? Because I assumed selling price to be 100 and margin percentage was given 29. So cost will be what? Selling price minus the margin. So margin and markup, both of them mean profits only. It's just that the term is used differently. Margin as a percentage applies on selling price. Markup as a percentage applies on cost. Both of them mean profit. So we have to take part value from total and multiply with the finding or with the requirement, you can say. Whatever value is given to you divided by its representative in terms of 100 and again multiply with the requirement also in terms of 100. Okay, all right. Just remember this, given value divided by representative multiplied with requirement and representative requirement in terms of 100. Now let's take a look at one more question. Cost of the machine is 100,000. Cost of the machine including issue cost. So basically you are financing 600 divided by 71 into 29. In this one, have a look. Yes. So here the requirement was selling price. So I multiplied it with 100. If the question had asked me margin, I would have multiplied with 29. Requirement in both the questions are separate. See, here it is selling price. In the earlier one, it was asking me markup. So here, given value 600 divided by the representative, which is 71 into 100. Understood, Sajanya? So it's fine. What you're saying, instead of into 29, we are doing into 100. Why? Because the question is asking me to calculate selling price, not margin. Take a look. Here now. Understood. So now take a look at this question here. So the cost of the machine is 100,000. You are going to raise finance for it. Okay. You don't have the money. You are going to raise debt for buying this machine, maybe like a loan. See, when you take up a loan, you have to incur some issue cost also, processing charges, etc. Correct. Yes, Arshita, you are right. Terms are associated like that. Both of them mean profit. Yeah. So the raising of the loan, there will be some costs, and the costs is 5%. You have to calculate the amount of debt finance to be raised. Simple question. Please tell me what is the amount of finance which you will need to raise? Okay, I see some of yours. See, the equation is very simple. Some of you are making simple errors here. See, concept, whichever value the percentage is applied on, assume it to be 100. Now, issue cost will apply on the total amount that you raise as loan, right? Whatever amount you raise as a loan, the issue cost will apply on that. So let the gross finance be 100. Then issue cost will be 5. And what is the money available now? 95. And this net finance used for acquiring the machine. This is what will be available for acquiring the machine. So given value is what? 100,000 divided by the representative 95 into 100. None of you gave me the right answer. What happened? See if you're able to understand now. Total amount which you need to raise is 100. That's what the question asked you. Out of that, you're going to pay issue cost of $5. You'll be left with 95 in your pocket. That is what you will go and use the money to buy the machine for, right? So 95 is representative of the 100,000 cost of the machine. So you will need to raise 105,263. Then out of this, you will pay issue cost 5%, which is 5263. Then you will be left with 100,000. And this 100,000 you can use to buy the machine. So the loan which you will raise will be of $105,263. Please take a look at the solution. Very, very important concept. Spend 2 minutes, just observe what is happening. Let me know if you're getting it out. In here, the question is asking you how much finance you need to raise. So the cost of the machine is 100,000 and you're going to incur some issue cost also. So definitely you need something more than 100,000. That should be clear. So those of you who said 95,000, that is fundamentally incorrect. That is fundamentally incorrect because I need to raise more finance. One to pay for the cost of the machine and another to pay for the issue cost. Okay. So what I'm saying is, okay, that this issue cost as a percentage, it applies on gross finance. Whatever amount of loan that you raise, you need to pay issue cost on it. So let that gross finance be 100. Then issue cost will be 5 and balance $95 will be left, which you can use for buying the machine. So what I need to buy the machine for is 100,000. So the representative of 100,000 is what? 95. 100,000 divided by representative 95 into 100 by 100 because I want to know how much total finance I need. So that comes as 105,263. Amount total which I will raise is 105. When I raise this amount raised is this, then I'll incur issue cost 5%. This is gone. This I will pay to the bank. Then balance left for machine acquisition. This is what I wanted now. It's getting verified also here. See? This is what I wanted from acquiring the machine. Is it clear? Perfect. So that's the concept of proportions which I wanted to discuss. See, I've put this in a Excel file called FM formula sheet. You'll get it here. Rounding off also, and then proportion as well. And let's talk about one more concept here. So let's say these dividends are given to you. Company paid a dividend of $100 in year 1, then 108 in year 2, 112 in year 3, and 125 in year 4. This is the dividend which the company has paid over the 4 years. Can you tell me what is the growth in dividend in year 2? What is the growth in dividend in year 2? Quickly. Up to one decimal place. All the answers which I'm gonna ask you now, give me up to one decimal place. 8%? Perfect. How did you calculate that? That's also very interesting to know. See, you might have been doing it like this. 108 minus 100. First you calculate 8. Okay. And then you do 8 by 100, which is 8%. No longer will you be doing such calculations. What you should be doing is 108 divided by 100 minus 1. You get 8%. Ma'am, how did this formula come? How do we know if it is correct or not? See, this is nothing but a derivation of this formula only. Ma'am, how so? Can I write this as 108 minus 100 divided by 100? Can I break this down as 108 by 100 minus 100 by 100, which is nothing but 1. I can write down 100 by 100 as 1. Look at this and look at what I've done here. So going forward, whenever you have to calculate growth in a number, please follow this formula. Current number divided by the previous number minus 1. Go through it. Let me know if there's any doubt. Okay. So not needed. Going forward, this is how we will. 108 by 100 minus 1. Then, can you tell me growth in dividend in year 3? Now use this growth formula which I've told you. Current value divided by previous value minus 1. 3.7. Let's see. 112 by 108 minus 1. 3.7. Then growth in dividend in year 4. 125 by 112 minus 1. 11.6. Okay. So we have found out the growth in dividends in the over the years. So what is the average growth rate if you ask me? Average growth rate is 7.8%. And it is simple average of all the growths. This is a simple average. Now I want you to calculate the compounded average growth rate. That is the growth which applies year on year. What is compounded average? Growth which applies year on year. So what is the compounded average growth rate over the years? What is the compounded average growth rate? So how do we compute that? Look at this, a new formula for you. See, just now, what did I tell you? When you have to compute growth, what do? 125 by 100 minus 1. 25% growth. But this 25% is the total growth from year 1 to year 4. But how many times has the growth happened? I want to know the per annum growth, right? So what? How many times the growth has happened? Look at my cursor. Once here, 100 became 108. Second time here, 108 became 112. And the third time here, 112 became 125. So how many times did the growth happen? Can I say 3 times? Don't get confused by looking at 4 years here. The growth in dividend has happened over 3 times. So what you have to do in this formula, just put this part in a bracket and raise it to the power of 1 by 3. Ma'am, why 3? Because the growth has happened 3 times. That's the reason. So your compounded average growth rate is 7.7%. So on an average, every year the dividend has grown by 7.7%. You can see for yourself. If I do 100, then 100 into 1 plus 7.7%, then this into 1 plus 7.7%, again 1 plus 7.7%. These are not the real dividend values, these are the average growth rate values. Just for verification, I've done this calculation over here. This is the compounded average growth in dividend. This is how you compute it. Normal growth formula, raise it to the power of 1 divided by the number of years of growth. Here the growth has happened 3 times, so therefore you do raise to the power of 1 by 3. Please check the formula, see if you're getting it. What is the way to use raise formula? You have to click shift and 6 on your keyboard. Shift and 6 on your keyboard. You will get the raise button. And then that's just fine. Okay. So this is a Kaggle concept which I wanted to discuss. Now moving on. I'm sure all of you are aware of the format of a simple T-form balance sheet. Okay, we have assets on the right hand side and equity and liabilities on the left hand side. Okay, always remember when we say equity, it always means equity share capital plus reserves and surplus. Okay, So that is equity. And you might hear a term called capital employed. Now, when we say capital employed, it means equity plus debt. Okay. So, can I say equity plus debt, basically this part, is equals to total assets, is equals to total assets minus the current liabilities, total assets minus current liabilities. And then can I break down this total assets as non-current assets plus current assets minus current liabilities? And I can further break this down as non-current assets plus, see what is current asset minus current liabilities? Working capital investment. So capital employed can also be written as non-current assets plus working capital. Okay. So there are two ways in which you can calculate capital employed. One is simple, straightforward, equity plus debt. And the other one is non-current assets plus working capital. And equity is what? Equity share capital plus reserves. And that is total assets minus all liabilities. That is net assets. Clear? Simple concepts. What is capital employed? What is equity? That's all from this file for the time being. Equity is not net worth. Net worth would be for both debt and equity combined. Sometimes, see, again, there is one thing which I want to mention to you here, that finance is not an exact science. You might see different interpretations of the same terms. In fact, I'll tell you, sometimes this net asset term, now, it will be used for equity plus debt also. A lot of times, one word could be used for two concepts. And so, in a lot of interpretations, net worth is for equity also, and sometimes it is for equity plus debt also. Okay? So, net worth, generally, the term can be associated with both equity also and equity plus debt also. But more generally, referred to, you can write it here also, or net worth. All right.
Um,
So we will be starting with the first chapter, and that is the financial management function. Okay. So the financial management function, we'll come to Excel. So first of all, we need to understand what financial management is. So now we're getting into the course. So what is financial management? It is about managing the financial resources effectively to achieve the financial goals. Okay. So a financial strategy aims to achieve financial goals by managing financial resources effectively. Financial strategies include number one, so four very important decisions that you as finance managers would be taking. Number one is investment decision. Number two, financing decision. Number three, dividend decision. And number four, risk management. What are they? Investment, financing, dividend, and risk management. So you as finance managers would be involved in each of these decisions. And this will become the, foundation for all the chapters that we're going to study. So investment decision. Choose where to invest money to ensure maximum returns and business growth. So where do you want to invest your money? In which project? In which business? Then financing decision. Determining how to raise funds for business operation. So you decide that, okay, I want to purchase this machine. I want to invest in this machine, or I want to purchase this business, acquire this business. From where do you get that money? How do you get the money? That is financing decision. Then dividend decision is deciding how much profit. So you're making profits. How much should you retain and how much should you distribute to shareholders? So deciding how much profit should be distributed to shareholders and how much should be reinvested in the business. That is dividend decision. And finally, risk management. Whenever you are exposed to financial risks, there will be a chapter dedicated specifically to it. Risks like foreign exchange risk, interest rate risk. So you need to manage risk there. That's called risk management. So you as finance managers, okay, investment decision, financing decision, dividend decision, and risk management decision. So these strategies, okay, these decisions, they are implemented through plans and statements. You'll be making detailed plans of what you want to achieve. Then budgets and forecasts. You'll prepare budgets for respective activities, what the cash flow forecast would look like if you invest in a particular business, and internal controls. So measures to ensure financial resources are managed properly and risks are minimized. Okay. So these are the the strategies how they are implemented. Okay, so that's the basic of financial management. Now remember this forever from now. There could be even, objective test questions out of this. Why do you do financial management? And that is maximization of shareholder wealth. So, in fact, this should get tattooed on your mind now that you are getting into the financial discipline. The ultimate goal of a finance manager is not profit maximization, it is wealth maximization. Very short but very critical concept. So as you also grow in your careers in finance field, if you choose, you will really see this, that whatever decisions you take, it should be from the overall objective of being able to maximize the shareholder wealth. Okay. So maximization of shareholder wealth is the key, the ultimate objective of financial management. Okay. So maximizing shareholder wealth is a key objective for businesses, helping managers make better financial and strategic decisions. So, shareholder wealth. How do you determine wealth? So, shareholder wealth is determined by two factors. Number one, dividends. Number two, share price growth. Forget everything. Just any one of you has made investments in stocks of any company? Investment in the stocks of any company? Komal says yes. Harneet says yes. So, see, I see some of you are investing. Okay. How do you, okay, so let's say you have invested 10,000 rupees. How do you see the growth of that 10,000 rupees? Let's say the company has paid you dividend of 500 rupees and the stock price has changed. And let's say from 10,000 earlier, now it has become 11,000. It has paid you dividend also. So, what is the wealth increase which you saw? 500 dividend and 1,000 growth in the share price. That's how your wealth increased, right? So shareholder wealth is determined by two factors, which is what? Dividends and share price growth. So these are the ways in which the wealth of the shareholder increases over time. Okay. So dividends are what? Profits distributed to the shareholders. The profits which the companies make, they are distributed to the shareholders. And share price growth, increase in the company's share value. Together, these factors comprise total shareholder return. So, a measure of shareholders' wealth is called the total shareholder return, a very important formula, TSR, which is a key measure of a company's financial. By opening share price plus dividend yield is what? Dividend per share by the opening share price. So, or else you can simply say it as that TSR is change in share price plus dividend per share by opening share price. So, capital yield is what? The capital growth, the change in the share price, and always calculated on opening share price. Okay. So, divide by opening share price plus dividend yield is what? How much did you gain in terms of dividend? So, dividend per share by opening share price. So, Fareen, what I was saying is that a measure of shareholders' wealth is total shareholders' return. And what is the total shareholder return? A shareholder gains in terms of two criteria. One is through dividend, other is through share price growth. Both of them can happen together, or one of them may also happen. Like just share price growth could also be there, or it could be coupled with dividends. Different companies choose different policies. Some companies may or may not pay dividends. Okay. So shareholders earn through dividends and through share price growth. The growth in share price is called capital yield. Okay, the capital growth, capital yield. It's measured as change in share price by opening share price. And dividend yield is what? Dividend by opening share price. Or you can simply just look at this formula here. You can calculate it as change in share price plus dividend per share by opening share price. This is a formula which you will have to memorize. Please take a look. It's a very simple formula as such. How does the shareholder earn? Through capital growth and through dividends. So the formula is change in share price plus dividend per share by opening share price. Please take a look at this. Anyone having any doubt, let me know. Simple formula. Dividend is not paid on opening share price. Dividend is paid. So for example, if the opening share price, it's just a way to compute the returns. So let's say the opening share price, everyone listen to me carefully here. So let's say opening share price is $100. Okay. Dividend during the year is $8. And closing share price. And there's no relation between this. That 8 is linked to 100, nothing like that. Dividend which the company has decided to pay is $8. And the closing share price is 105. So how would you calculate TSR? What is the change in share price? 5. Okay. Dividend is 8. What is the total return which the shareholder has got from his investment during the year? What is the total return he has made? 13. So TSR is nothing but 13 by 100. 13%. Understood? 13 by the opening share price. That is what I've written in the formula over here. Try to correlate. So that is TSR. We'll do some questions on it, don't worry. Okay, so on that note, let's take a break here. We'll break for about 15 minutes and then post the break, we will continue our discussion. So refresh yourself, be back. We'll continue. Hello everyone, welcome back from the break. All right, let's continue with the discussion. So, reasons for maximizing shareholders' shareholder wealth. Number one, higher returns to the shareholders make fundraising easier. When a company provides higher return to the investors, it gains trust in the market. This makes it easier to raise funds further through maybe equity or debt financing for expansion. Example, Reliance, led by Mukesh Ambani, has consistently delivered high shareholder returns. Now, because of its strong financial position, it has been able to attract global investors. Then, second reason, providing value to customers. Companies that focus on customer satisfaction achieve sustained profits, leading to higher stock prices and dividends for shareholders. So, when you want to maximize return for the shareholders, you will want to make higher and higher sales. And higher sales are possible through giving good quality products to the customers. So, in a way, you provide value to the customers if you pursue or chase the objective of maximizing shareholders' wealth. TCS provides quality IT services globally because it consistently meets customer needs. It earns higher profits, leading to increased stock price and regular dividend payouts for investors. Companies with low returns risk hostile takeovers. If a company fails to provide adequate returns, it may become a target for acquisition by a stronger competitor. Example, Mindtree was an underperforming IT company, making it a target for a hostile takeover by L&T in 2019. And why do maximize return? Because directors have a duty. They have a fiduciary duty to maximize the shareholders' wealth. Okay, company directors are legally responsible for ensuring profits and value appreciation for shareholders. These are the reasons for maximizing shareholder wealth. Now, it also suffers from certain criticism. Criticism of maximizing shareholder wealth. It ignores market imperfections. Maximizing shareholder wealth can lead to monopoly power, reducing market competition, and increasing prices for consumers. Example, when Reliance Jio entered the market, it offered free services, leading to the exit of several competitors like Aircel and Tata Docomo. So many service providers were there earlier, right? But now they are non existent. This created a near monopoly, and once competition reduced, Jio started increasing prices. Okay, so it ignores market imperfection, okay, leading to monopoly power. Next, it ignores social needs. Companies focused only on profit may neglect essential social responsibilities like providing affordable healthcare. Example, Sun Pharma has been criticized for increasing medicine prices, making essential drugs expensive for the public while focusing on wealth maximization. Then neglects other stakeholders. See, shareholders are not the only stakeholders. There are other stakeholders of the company as well. And when you pursue the goal of shareholder wealth maximization, you are practically ignoring the objectives towards the other stakeholders. So companies may exploit employees or cut costs at the expense of customer satisfaction to increase profits. Companies like Ola and Zomato have been criticized for harsh working conditions for drivers and delivery partners, including low payouts and long working hours, despite these firms increasing profits. So they're delivering value to the shareholders, right? But they are doing it at the expense of other stakeholders. Then, not all shareholders prioritize maximum returns. Some shareholders are not focused on maximizing profit. Rather, they want they want satisfying returns. Okay, they rather on preserving legacy or social impact. Example, Tata Group focuses on providing satisfactory return to the shareholders rather than maximizing shareholder returns. It's all about providing satisfactory returns. This is the criticism. So there are the terms which you might see in the subject. That's perfect market. What is a perfect market? It's a theoretical concept where financial markets operate under ideal conditions with no imperfections. Ma'am, what are imperfections? A market imperfection exists when real world conditions deviate from the assumptions of a perfect market. And then what ways can they deviate? Taxes, corporate tax, dividend tax, capital gains tax. They influence financing and investment decisions. Then transaction costs. Costs such as brokerage fees, flotation costs, and administrative charges affect securities trading. Then asymmetric information, that managers may have more information. There is asymmetry of information. Managers have more information than the investors. So leading to issues like adverse selection of this you can ignore. So managers may have more information about the firm than the outside investors. Then agency problem. Conflicts of interest between managers and shareholders can affect decision making. Agency problem is that the managers are not acting in the best interest of the shareholders. So that's also market imperfection. And lastly, restricted access to capital. Small firms may find it harder or more expensive to raise funds compared to large firms. Okay. So these are market imperfections. Now, when these market imperfections are there, it's called an imperfect market. And when none of these imperfections exist, it's called a perfect market. So perfect market is basically a hypothetical market, non-existent, because taxes would be there, costs would be there, asymmetry of information would be there. So in this way, you can say it's a very highly theoretical concept wherein nothing of these sorts exist. Is it clear? The term perfect market and market imperfections, are they clear? Okay. Now, let's move to the relationship of financial management with financial accounting and management accounting. So, those of you who are coming from the knowledge level, you'll be able to appreciate this topic better, where you understand the relationship of FM with financial accounting and then management accounting. So, what is financial accounting? Deals with recording, summarizing, and reporting a company's financial transactions. Example, a company decides to lease equipment instead of purchasing it. So, if the lease term is longer than 12 months, the company must recognize it as a liability. Again, this is accounting principle. Increasing its gearing. So, there's this term called gearing ratio, which is basically the percentage of debt in the capital structure. Now, when you report a lease as a long-term lease, it will impact the gearing. Or else, if you report it as a, current liability, it will impact the current ratio of the company. So there is interrelationship between financial accounting and financial management. Okay, so a company decides to lease equipment instead of purchasing it. If the lease term is longer than 12 months, the company must recognize it as a liability. increasing its gearing. A higher gearing ratio might make it harder or difficult to secure additional loans. Okay. Then management accounting. Management accounting focuses on internal reports that help in decision making, planning, and controlling operations. For example, a company forecasts its revenues and expenses for the upcoming year. If the budget shows a potential cash deficit, management may need to arrange for additional financing or reduce expenses. So all these disciplines, be it management accounting, be it financial accounting or financial management, they all go hand in hand. Okay. So when a company is doing forecasting for management accounting purposes, it can do so better with the help of financial management. It's a simple topic. Next topic that we have is strategy. Important, I would say, would be identification of a strategy as corporate objective or financial objective. We'll come to it. Okay. So, what is a strategy? A strategy is an action plan to achieve an objective, and it could vary in duration. Basically, it could be long term, medium term, short term. Okay. And strategies can be planned for pursuing two types of objectives. So, what is a strategy? It's an action plan to achieve an objective. Now, those objectives could be of two types: corporate objectives and financial objectives. Corporate objectives pertain to the entire organization. Okay, basically, the general direction of the entire organization. And it encompasses a range of goals such as profit targets, market share targets, then share price growth, then local and environmental concerns, maintaining a contented workforce. Okay, so these are the corporate objectives which pertain to the entire organizations. Now, these objectives can be categorized as follows. So, one is profit goals, objectives which lead directly to increased profits. Sorry. It's just editing 1 second. System seems to have hung up. Huh? Hold on, please. So the corporate objectives can be classified in four categories. One is profit goal, which objectives which directly lead to increased profits. Example, cost reduction measures. Okay. Then surrogate profit goals, objectives which indirectly lead to increased profits. Screen is not visible. Is not visible. 1 second. Please check now. For me it's showing that Excel is visible. I'm showing Excel. Is it visible or not? No? Okay. Okay, I'll just stop sharing and then reshare. No problem. 1 second. Let me know if it's visible now. Yes? Perfect. Thanks for the confirmation. Perfect. So, four categories of corporate objectives. First is profit goal, which lead to directly increase in profits. So, if you reduce the costs, your profits would increase. That's a direct increase in profit. Second is surrogate profit goals, which indirectly lead to profits increase. How? Maintaining a contented workforce. Now, when you have a contented workforce, that is your employees are working happily, it sorry, it indirectly leads to increased profits because they will contribute to their maximum efficiency and productivity levels. Then constraints on profit. Objectives which limit profits. Constraint, restriction on profits. How? When you have to ensure that your business operations do not harm the environment. See, it is leading to a reduction in the cost. But is it giving you any increase? I mean, it is leading to higher cost. But is it giving you higher profits? No, it's just to save the environment that you're incurring the cost. So objectives that limit profits. See, it is a corporate objective to ensure that you address local and environmental concerns. So that's a constraint on profit type of a corporate objective. And lastly, dysfunctional goal. Objectives that lack long-term benefits. Example, pursuing market leadership at any cost. What do you mean by market leadership? That is, you have to get a certain market share. So, by hook or by crook, by giving excessive discounts, you're just selling your product to acquire a share in the market, a larger share in the market. So, pursuing market leadership at any cost. So, it's not giving you benefits even in the long term. If you give so much discount, the day you stop cutting down the discount, the customers will go. That's a dysfunctional goal example. Okay. So, corporate objectives, they pertain to the entire organization and often encompass goals such as profit targets, market share targets, share price growth, and they can be classified into different categories. Is it fine now? Actually, there was some bug in the system, I think. My screen also hung up. Is it fine now? Okay. Yeah. So what I was saying is that corporate objectives, they pertain to the entire organization. So you will see that these are holistic objectives, which have profit targets, market share targets, share price growth, and these can be classified as profit goals. What are profit goals? Which directly increase profits. Okay, direct increase in profits directly. Indirectly increasing the profits, that's called surrogate profit goals. Then constraints on profit, objectives that limit profits. They are increasing the cost but not necessarily the profits. And dysfunctional goals, objectives that lack term benefits. Okay. My system went into updates. Just reshare my screen. Hold on. Okay. So these are the corporate objectives. Now, remember that a company may pursue either maximizing or satisfying these objectives. So, maximizing is aims for the best possible outcome, that is, maximizing returns. And satisfying returns is seeks an adequate outcome. Not the, may not be the best possible outcome, but an adequate outcome that meets the objectives without necessarily optimizing for the best possible result. Okay, these are the two terms which you should now be aware of. Maximizing is best possible outcome, satisfying is. So, this satisfying approach is a more sustainable approach in the long term. Okay, so this is about corporate objectives. Now, moving on to financial objectives. Financial objectives include EPS, how much earnings the company is making, the dividend, the gearing level, and operating profitability, basically the EBIT, earnings before interest and tax, the operating profitability of the company. This is very specific to certain financial metrics. Okay, so now let's do some questions on total shareholder return. Yeah. Example one on your screen. A shareholder purchased 1,000 shares in SJG company on 1st Jan at a market price of $2.50 per share. On 31st December, the shares at a market value of $2.82 per share. The dividend paid during the year was $0.28. Calculate the total shareholder return. All of you quickly try this. Example 1. Please try this. All right, let's see. 24%. So opening share price 2.5, closing share price 2.82. So change in share price is 0.32, dividend is 0.28. So total shareholder return in dollar terms is 0.6. And total shareholder return in percentage would be 0.6 by the opening share price, therefore 24%. Okay. Then B company has just released its financial results for the year end, and its profits before tax increased by 38% over the previous year. This was largely due to a doubling of sales in Southeast Asia. However, the share price in B company fell by almost 20% immediately after the profit announcement. You have to tell me which is least likely the reason for fall in share price. Please try this. Give me the correct answer. Which is the least likely reason for the fall in the share price? Read through the options. So all of you telling me B. Let's check. That is the correct answer. See, the first option is sales in Southeast Asia had been expected to increase by more than 100%. It increased by just 30. It's not really given. This was largely to a doubling of sales. So it increased by 100%, but the expectation was that it would increase by more than 100%. And when you're not able to meet the expectations of the market can behave negatively. So, since the growth in sales price is less than the expectation, this would negatively impact the shareholders' perspective towards the company. This could lead to a fall in the share price. Second one is depreciation charge was higher due to a change in the accounting policy. Depreciation is nothing but a systematic allocation. It's just an allocation of the cost of an asset over its useful life. If you allocate it differently, it doesn't change anything because the cash outflow of the machine is done. How you allocate its expense over the years doesn't make any difference to the investors. So change in accounting policy for charging depreciation is least likely to cause a fall in the share price. So this is the correct answer. Very well done. Then C, the level of B company's business risk has increased over the year. Increase in business risk could lead to a fall in the share price. And delays in the launch of new products are expected in the coming year. That can also lead to a fall in the share price. So this is also false. Okay. Then how B? Explain only B. C. Let's say cost of machine is 100,000. Okay. And depreciation policy earlier is, let's say, straight line method, which I am following. So per depreciation per annum, useful life is 5 years. Depreciation per annum is 1 lakh by 5, $20,000. Policy changed to WD. Depreciation rate is now, let's say, 45%. Now, depreciation for the current year is now turning out to be, let's say, 1 lakh into 45%, 45,000. The total cost of the machine, is it changing? No. Depreciation per annum, which will get charged off to the P&L, is changing. Shareholders know that this is not going to create any impact. Whether you charge 20,000 over 5 is 20, 20, 20, 20, or 45, then 35, then 25, then 15, then 5. Total 100,000 only will get charged. Total which will be charged to the P&L would be 100,000 only. So, therefore, a change in the policy will not cause any impact. The profitability of the company overall does not get impacted, so the shareholders will not react negatively to a change in depreciation policy. In fact, in finance, you will now slowly, gradually realize that depreciation is of no use other than the tax benefit it gives. Yes, the overall impact is nothing. It's just that the year in which it is getting allocated may change. Okay, so therefore, no impact or least impact. When you are going to delay the launch of new products, you are delaying the revenue stream. Delay in revenue is a negative thing. Therefore, this can lead to a cause in the fall. It can cause a fall in the share price. Delays of new product launches, which can give you revenue, is a negative news for the markets. Okay. So that's about this example. Now, example one on your screen here. An investor purchased 100 shares in ABC company at the beginning at the market price of $10. During the year, the investor received a dividend of $1.2. At the end, the shares had an ex-dividend market value of $12.9 per share. Calculates the total shareholder return. All of you, please try this. Example one on your screen. Very good. All of you got it right. It is 41%. Let's have a look at the answer. Opening share price 10, closing share price 12.9. So change in share price is 2.9. Dividend of 1.2. So the total shareholder return in dollar terms is 4.1. So 4.1 by 10 is 41. Set. Ex-dividend. So the next topic itself, I'm going to talk about that. So what is ex-dividend and cum dividend? Share price. We'll come to that. So the answer is TSR percentage is 41%, rightly calculated by all of you. Now you must have seen a word called ex-dividend price. Now what's that? So there are two terms called cum dividend and ex-dividend share price. Cum dividend is when share price is trading with the value of dividend. What does it mean? That when the dividend is announced by a company, that so and so shareholders holding the shares on, let's say, date of 15th of September will be eligible to get dividends. Okay. So anyone who purchases the shares from today the announcement was made, and you can purchase the share till 15th of September to be eligible to get the dividend on the share. There is a cut-off date, the record date. So those who buy the shares during this time, they will be getting a dividend. So the share price starts trending upwards of the amount of dividend. So let's say till yesterday the share was trading at 100. Dividend of $5 has been announced today. Now the share will start trading at 105. Everything else remaining the same. So it will start trading at 105 on 15th September. Once the cutoff date is gone, again the stock will come down to its ex-dividend price. Basically 105 minus the value of the dividend, which is 5. It will again come back to the ex-dividend price. That's the concept of cum dividend and ex-dividend. Read with me again here. So cum dividend is, this is the share price when dividend has been announced but not paid. So investors who buy shares during this period are entitled to receive the upcoming dividend. And after the cutoff date, investors will no longer get the dividend. So this is the share price after the dividend payment has been made. Investors who buy shares during this period are not entitled to the upcoming dividend. That is what cum dividend and ex-dividend is. Calculations are always done. TSR basically is always done on ex-dividend share price. Okay. TSR is always calculated on ex-dividend share price. So let's take a look at this. A company declares a dividend of $2 per share. The cum dividend share price is $50. Now, once the dividend is paid to the shareholders holding the shares on the record date, that is the cutoff date, the share price drops by the amount of dividend. And the ex-dividend share price becomes $48. 50 minus 2, 48. That's the concept. Is it clear? Very simple. That once the dividend announcement is done, the stocks start trading upwards to the amount of dividend. And then once the cutoff date is gone, the stocks come down to the ex-dividend price. Okay, so that is cum dividend and ex-dividend share price. Then similarly, we have a concept called cum rights and ex-rights share price. Now, what is a rights share? When you are holding shares of a company, you are eligible to subscribe to any new issuance which the company does. You have a right to buy those shares. You have the right to subscribe to those shares. It's called rights shares. Okay. And these shares are offered to the existing shareholders at a discount. Okay. So a rights share is an additional share offered by a company to its existing shareholders, giving them the opportunity to buy more shares at a discounted price compared to the market price. Okay. So just like we had cum dividend and ex-dividend price, shares also trend cum rights and ex-rights price. So what is cum rights? This is the share price before the rights issue. Announcement is done, but before the rights issue has been completed. Investors holding shares are entitled to subscribe to additional shares at a discounted price during a rights issue. So if you purchase a cum rights share, you will be eligible to get the new shares of the company at the discounted price. And X rights is what? This is the share price after the rights issue. The price adjusts downward to reflect the dilution caused by the issuance of additional shares at a discount. Okay, so the theoretical X rights price, it comes down. Okay, look at this. A company announces a 1-for-4 rights issue. Ma'am, what does it mean? That every 4 shares which an investor holds, that investor can buy one new share. He has the right to buy one new share. Okay, allowing shareholders to buy one share for every 4 shares they hold at $40, while the cum rights price is $50. Okay, so you have to calculate the X rights price. This is also called theoretical X rights price. That theoretically, post the rights issuance, this should be the price. It's called TERP, theoretical X rights price. This will come as a topic formally to you in the upcoming chapters. Okay, so calculate X rights price. So how do we compute it? Very simple. You just need to compute the weighted average cost. How do you do that? So original shares, for every 4 shares that you hold, how much amount you'll have to pay? 50. So what is the weight of this? The right shares will be 1. So out of total 5, you need 4. So 4 out of 5 is 80% weight. And right share 1 is what? 1 by 5, 20%. And for it, you need to pay $40. So what is the weighted cost? 50 into 80%, 40 into 20%. So the X rights price is $48. Please take a look. This is how you compute the theoretical X rights price. Okay, let me explain again. So for every 4 shares that you are holding, now your portfolio will increase by one more share. Earlier you were holding 4 shares in your portfolio, 100% weightage, and its price is how much? 4 shares into 50. Now look at this. So you were holding a portfolio of 4 shares of $50 each, $200. Okay. Now that you're going to take up right shares, your portfolio will increase by 1 share. Okay. Now this 1 share that you're taking, how much are you paying for it? 1 share, you're paying 40, correct? So what is the total cost that you have? 240. For how many shares? 240 by 5. 5 shares. So what is the average cost? 48. So instead of calculating in value terms, I have calculated the weight over here. So 4 by 5, 1 by 5, directly multiply this with the cost, I get the weighted cost here. But you can do it in this way also. What is the value of the investment that you're holding divided by the number of shares? You get the theoretical X rights price. However, you're going to be using this layout in different concepts also. So I'm trying to familiarize this with you from here itself. So you can consider calculating the weighted cost. Did you understand? So original shares, you spent $200. When you spend this, then only you will get the right shares. Now, when you purchase the shares at the rights at a come rights price, then only you'll be eligible, or you are holding the shares from before. So original shares and rights shares. Total amount that you have paid is 240 for how many shares? These were four earlier. Now you got one more, five shares. So therefore, the weighted average cost is $48. Understood now, Sajanya? The 40 they have given is also the come rights price. No, this is not the come rights price. This is the price for the rights shares. That's the discounted price for the rights shares, which you will have to pay. Okay, so that is not come right. Come right is for the existing shares only. Okay, Alok? Rupinder says, ma'am, we have to do calculation using weighted average method. See, in finance, you have that freedom. No format is laid down for you. You can follow any format that you want. If you are comfortable with this, solve using this. But there's a reason why I'm telling you this format, because I'm going to be teaching you the concept of weights in a lot of other concepts also. So therefore, I want you to be comfortable with this small table format that I'm teaching you. It will help you in other concepts. Otherwise, you're free to solve using this approach also. No, I mean, there are no marks which will be deducted for following a different format in finance. Okay? 50 was the original price of the share. Yes. Come rights price of the share. So anyone who takes the share at that price will be eligible to get the rights share at the discounted price. Once the rights issue is done, the stock price will come down to 48. Okay, the stock price will now come down to 48 because new shares got issued at a discounted price. So the effect of that discount will now show in the price of the share once the record date is over. That is the meaning of this 48. That once the rights date, record date is gone, the stock will start trading 48. Look at this. This is the share price after the rights issue. The price adjusts downward to reflect the dilution caused by the issuance of additional shares at a discount. Take your time, observe the calculation. Any doubts still? Let me know. If it is clear, let me know. Then we'll move to the next topic. Yeah, perfect. Okay. Similar to this, we have a concept called come bonus and X bonus. So what is a bonus share? Bonus share is a free share. Understand the difference between right share and bonus share, okay? Right share is a discounted share. You have to pay money for it. But for bonus share, you don't have to give any money. It's given to you free of cost. So bonus share is a free share issued by a company to its existing shareholders in proportion to their current shareholding. Bonus shares are distributed from the company's accumulated profits and do not involve any cash transaction from the shareholders. See, a company has accumulated reserves and surplus, right? Company can distribute its reserves, can distribute its accumulated reserves, or you can say profits, as bonus shares. The entry which is passed is reserves and surplus account, debit. Equity share. A company can distribute its accumulated profits as bonus shares. It's also called it's also called scrip dividend. Why so? One is your normal cash dividend when you distribute cash to the equity shareholders. Now, instead of giving cash to the equity shareholders, you are giving them bonus shares. So that's why it's called scrip dividend. So, bonus share is a free share issued by a company to its existing shareholders in proportion to their current shareholding. Just like you had a rights issue ratio now 1 is to 4. Like that, we have bonus ratio also, maybe 1 is to 2. So, bonus shares are distributed from the company's accumulated profits and do not involve any cash transaction from the shareholders. You do not have to pay anything. As shareholders, you do not have to pay anything to get the bonus shares. The entry which is passed as reserves and surplus account debit to equity share capital. It's also called capitalization of reserves. You are practically converting reserves into equity share capital by issuing bonus shares. So they're also known as scrip dividend. So the stock price can trade come bonus and ex bonus. So this is the share price before the bonus shares are issued. Investors holding shares during this period are entitled to receive the bonus shares. And ex bonuses, this is the share price after the bonus shares are issued. The price is adjusted downward to reflect the increased number of shares. Same concept throughout. Come dividend, ex dividend, come right, ex right, come bonus, ex bonus. So the concept is same everywhere. Example, a company announces a 1 for 2 bonus issue while the come bonus price is $90. Calculate X bonus price. I'll give you time to solve this one. Concept is same. Use the tabular approach, which you can see over here. Compute the X bonus price. Please try this. All of you should try and give me the number in the chat. All right, I see all of you getting 60. Karina is getting 89.7. Can't be correct. 89.7 can't be correct. Have a look here. See, original shares 2, and for every 2 share held, you will get 1 bonus share. So now your portfolio will comprise of 3 shares. For 2 shares, you paid a cost of 90, 2 into 90. And for this 1 bonus share, did you pay anything? Nothing, 0. So the weight of original shares is 67%, 2 by 3, and 1 by 3 is 33%. So multiply the cost with their weights, and you get that the X bonus price is 60. So yes, all of you who got 60 are correct. Understood, no? Okay. That was about come dividend, X dividend, come right, X right, and come bonus, X bonus. Simple concept, and we have understood it in the uh, same way. Now, next concept is EPS, earnings per share. 1 second, huh? Yeah, it is earnings per share. The formula to compute EPS is PAT, profit after tax, by number of shares. So if the number of shares reduce, that is, if the denominator reduces, EPS will definitely increase, basic maths. So directors, however, may try to artificially increase the EPS by share consolidation or share buyback. What is share consolidation? A share consolidation is when a company reduces the number of its shares by combining multiple shares into a single share. Example, so number of shares outstanding is, let's say, 1 lakh, and nominal value is $2 per share. Net profit is 1 lakh. So your current EPS is $1, right? 1 lakh by 1 lakh, $1 per share is the current EPS. Now company announces 1 for 5 share consolidation. It means that every 5 old shares of the company will now be converted into 1 new share. So earlier there were 1 lakh shares. Now how many shares will be outstanding? 1 lakh by 5 into 1, that is 20,000. 1 is to 5 share consolidation, that is for every 5 shares held, an investor will now get just 1 share. Shares got consolidated, and what happens is there is an opposite effect on the nominal value. The nominal value of the share increases. Earlier it was $2, now it becomes $10. Okay? So, overall, if you see, earlier the investor was having, let's say, 20,000 into 10, 2 lakh worth of shares in nominal terms. Now it is having 2 lakh. Earlier also it was having 2 lakh only. So there is no change in the wealth of the investor. Don't get confused. The number of shares reduced, so the nominal value increased. The wealth remained intact, 2 lakhs. However, the number of shares changed. Now net profit, I'm assuming it to be constant. So revised EPS you see. Because of share consolidation, your EPS increased. So these are some artificial techniques to inflate EPS, which could be used by the directors. Okay, and that is why reading financial statements is an art. You have to see whether there has been an effect of such activities on the EPS. Because, EPS is used in computing the share price also as a PE multiple. When you multiply EPS with the PE ratio, you get the price of the share. So if the EPS is inflated, your share price can also get inflated. There are, consequence of consequence like that. Therefore, these things are very important. You should realize that such tweaks can lead to far-fetched impact. Am I clear? Did you understand the concept of how share consolidation can lead to increased EPS? Okay. Then we have share buyback. What is a share buyback? A share buyback is when a company repurchases its own shares from the market, reducing the number of outstanding shares. This is typically done when the company believes its stock is undervalued or to return excess cash to the shareholders. Okay, so the company buys back its own shares and cancels it. So buyback is opposite of issuance. Company issues shares. How can it reverse the process? By doing a buyback. It buys back the shares and cancels them. Let's say number of shares outstanding was 10 lakh. Nominal value $10 per share. And net profit is 5 lakh. So current EPS is 5 lakh by 10 lakh, that is $0.5. Company buys back 2 lakh shares. Okay. Now the number of shares outstanding would be 10 lakh minus 2 lakh, that is 8 lakh. Nominal value per share is $10 only. Net profit 5 lakh. But you see, EPS has increased 5 lakh by 8 lakh. Why? Because the number of shares reduced. Understood? How share consolidation and share buyback can lead to increased EPS. Have a look at the calculations. Perfect. Now, try this example over here. During the year ended 31st March, George Company reported EPS of 10.3 cents. 100 cents make up $1. Just like we have 100 paisa making up 1 rupee, 100 cents make up $1. So 10.3 cents, you should write it as $0.103 only. Don't ever solve anything in cents. Just divide by 100 and write it in dollars. The company had 400,000 shares in issue at 31st March 15. On 1st October, George Company issued 60,000 shares. That is, after 6 months, the company issued 60,000 shares at the market price. Profit after tax for the year ended was 57,000. There were no preference dividends. Okay? You calculate the growth in EPS. Calculate the growth in EPS. How would you do it? You'll have to calculate something using weights, just to give you a hint. Try example 2 on your screen. You will need to use the weighted average table. Please try. Example 2 on your screen, you have to give me the growth in EPS. What has been the growth in EPS? So first calculate the EPS for the previous year, then EPS for the current year, and tell me what is the growth. You know how to calculate growth now. Current value by previous value minus 1. Please try this. I see a lot of you have tried. Very good. Let's see. See, 400,000 shares were outstanding throughout the year. Okay. So 400,000, we'll take it as it is. And 60,000 shares were issued after 6 months. So they were outstanding for 6 months only. That is 0.5 year. So the total number of outstanding shares, the weighted outstanding shares is 4,30,000. That is 57,000. So EPS is 57,000 by 4,30,000. Okay. And that is 0.133. Earlier it was 0.103. I told you, write it in terms of dollars, 10.3 cents or $0.103. So the growth in EPS is 0.133 by 0.103 minus 1. Okay. So I see a lot of you got it right. Please check if there is any doubt that is coming to your mind. Anyone, let me know. Please go through the calculation. See if you're getting any doubts. Let me know. Why? It's 28.7% in your calculation. Simply point. It could be because of some rounding off difference, okay? Maybe because the numbers I am using, they're not rounded off. That could be the reason. See, because, okay, what happens is in Excel now, although it is showing as 0.133, but in the background, it is taking such a long number, 0.1325558, and so on. That is fine. That's perfectly fine. So if I write, okay, if I write manually 0.133 by 0.103 minus 1, see, even I'm getting 29.12%. So that's fine, no problem. Anyways, the exam will ask you to round it. Your and mine answer will come same. Okay. So well done. That was example 2. Now let's move on to the next topic, and that is non-profit organization. See, so far since the inception of the class, we've been talking about wealth maximization, and ultimately, for that's for the goal of achieving for the shareholders. Now, there are organizations which are not profit also, like Smile Foundation, Helpage India, Akshay Patra Foundation. These are all organizations which are there but not for profit, but they are for social cause. Okay, these organizations operate without the same emphasis on cost or profit objectives as companies. They aim to maximize the difference between benefits generated and operational costs known as value for money. So they want to enhance the value for money. And how do they measure that? The benefits that they are creating versus the operational costs which are incurred for it. So value for money, VFM, it refers to maximizing the benefits generated while minimizing costs. Very, very important theory concept, I would say. Please mark this as an important theory topic. So, value for money refers to maximizing the benefits generated while minimizing costs. It is particularly important for NPOs that aim to serve societal interests rather than generate profit. So, the three E's framework, economy, efficiency, and effectiveness, they help assess BFM in an organization. So, what does it stand for? Have a look. Please mark this as super, super important. If a question comes, it is very easy to score marks on it. Okay. So, what is economy? I've tried to, give you the keywords on the left hand side here itself so that it is easier for you to remember, to recall. So, there are three E's which are used to assess whether a firm is creating value for money in an NPO. NPO is what? Non-profit organization. So, what are the three E's? Economy, efficiency, and effectiveness. Economy is minimizing input costs. Economy is about obtaining resources at the lowest possible cost while maintaining the required quality. It ensures the organization spends wisely. Okay? So, obtaining resources at the lowest possible cost. As the name suggests, economy. Economy is the lowest possible cost. Example, a charity providing school meals sources ingredients from a wholesale supplier instead of a local supermarket, reducing food costs while maintaining quality. So, if you are acquiring from a wholesaler rather than a local supermarket, you will be able to save costs. Okay? Uh, one second. In this way, you can measure cost of ingredients per kg to understand whether the company has been able to perform on this measure or not. Any reduction would be seen as achieving economy. Then, and be very careful, this is talking about input costs, the raw material costs. Then, what is efficiency? Efficiency is maximizing output to input ratio. Efficiency means achieving the best possible outcome with the given resources, minimizing waste and maximizing productivity. Okay, so you are reducing wastage and maximizing productivity. So, maximizing the output input ratio. More the output for less the input. That is efficiency. Example, a healthcare NGO uses a digital record system to streamline patient data, allowing doctors to see more patients per day without increasing costs. Okay, so performance measure patients treated per doctor per day. So please understand, for a hospital, what is the output? Treatment of patients. Input is what? The cost of doctors or the number of doctors, for them, doctors would be the input. So patients treated per doctor per day. So you're trying to maximize the output for a given input. That is what efficiency is all about. Maximizing output input ratio. Okay. So you're trying to maximize productivity, reduce wastage, maximize productivity. Effectiveness, achieving organizational goals. Effectiveness measures how well the organization's objectives are met using the available resources. That is, you are achieving the objective that you set out for. That is what effectiveness is. You are achieving the goal. Example, a disaster relief organization successfully provides 8 to 90% of affected families within 24 hours, achieving its objective. So, performance measure is response time in hours per disaster event. Like in how much time you were able to achieve the objective. Maybe in 18 hours, 16 hours. So, what is the response time for disaster event? So, that is effectiveness. Like you were able to achieve the goal. So, please take a look at this. Value for money, the three E's. Every time you will see question on this, maybe in section A or B for sure. Please take a look at it. Try to remember the keywords which I've given over here. What is economy? Minimizing input cost. Efficiency, maximizing output to input ratio. Effectiveness is achieving the goal that you set out. Please take a look. Please go through it. Let me know if there's any doubt. Please ask. Yeah? Perfect. Let's move further. So, measuring the performance of NPOs. Unlike profit driven companies, which measure success through financial metrics like revenue and profit, NPOs have multiple and sometimes conflicting objectives. See, for a profit making organization, it's very clear cut. Shareholders' objectives are above and beyond everyone else's. However, for an NPO, the objectives could be conflicting. So, measuring their performance is difficult because success is not always linked to financial outcomes. You cannot visualize the achievement of an objective because they are not always linked to financial outcomes. The impact of their work may take years to materialize, to visualize. And performance indicators can be subjective. So, what are the ways to measure NPO performance? Number one, expert judgments. Some performance assessments rely only on the opinions of experts in the field. Example, an education NGO may have its teaching quality reviewed by academic experts. Or what you can do is compare to similar organizations or the historical data of the own organization. So comparing performance against similar organizations or past performance can provide meaningful insights of how the organization is performing. Example, a university assessing its graduation rate compared to national averages. Okay, so these are the ways in which NPO's performance can be measured. So this is not a stereotype way which you would have observed for profit making organization. This is unique for NPOs. Okay, moving on. Next topic, very simple, stakeholders. I'll say one statement, you tell me whether it is true or false. All shareholders are stakeholders, but all stakeholders are not shareholders. Tell me true or false. All shareholders are stakeholders, but all stakeholders are not shareholders. Is it true or false? All of you are telling me true. That is correct. Please understand an organization has many stakeholders. And yes, all shareholders are stakeholders, but there are other stakeholders also, like customers, like directors, employees, suppliers. These are all stakeholders. So, stakeholders are individuals or groups that have an interest in, okay, that I'm actively interested in that company. So, stakeholders are individuals or groups that have an interest in, are affected by, or can affect the operations and decisions of a business. Look at the definition here. Who are stakeholders? They are individuals or groups that have an interest in. So either I am interested or I am affected by the company or I can affect the company. So these are stakeholders. Now they can be categorized as follows. Number one, internal. Number two, connected. Number three, external. Very important to know the meaning of these three categories of stakeholders, but it's very simple, I would say. So, internal, these are stakeholders who work within the organization and have a vested interest in its success, who are working within the organization. So, examples are directors, employees. So, these are all internal stakeholders. Then we have connected stakeholders. These are stakeholders who have a relationship with the organization, often through financial, contractual, or transactional links. So, some sort of contract would be there. Okay, it could be shareholders, creditors, suppliers, customers. These are connected stakeholders. What do you need to remember? There is a contractual relationship. Okay, there's a contractual relationship. Here they work within the organization. Okay, work within the organization, there's a contractual relationship. So those are connected stakeholders. And lastly, external stakeholders. These are stakeholders who do not work within the organization but are affected by its operations. Affected or they influence its business environment. Example, government, local community. These are external stakeholders. If you're able to understand the definition, you'll be able to classify any stakeholder into these groups. What are internal? Working within the organization, within the boundaries of an organization, directors, employees. Connected stakeholders. They have a contractual relationship. Who? Shareholders, loan providers, creditors, suppliers, customers. Then external stakeholders. They're not within the organization, but either they are affected, like the local community is affected, or they can influence the business environment, like the government. Okay? So these are the stakeholders. Please take a look at this. See if you're getting any doubt. Let me know. Please go through it. See if you're getting any doubt. Yeah. All right. So I hope you realize the company has got so many stakeholders. Now imagine the role of the directors of the company. What a strong role they play. They have to meet everyone's expectations because there can be conflicts between what these different stakeholders want. Customers may want lowest of prices. Just trying to give you perspectives now. Customers may want lowest of prices, but shareholders will want maximum of profits. Correct? Similarly, employees will want highest of the salaries, but shareholders want highest of profits. Again, local community will want environment to be taken care of. But again, that comes at a cost. So many different conflicts could arise with these stakeholders, and that is the role of primary role of the directors, you know, to manage the shareholders' expectations properly. Okay. And there stems in the concept of agency theory. Again, I'll mark this as an important topic. It's a very interesting, simple topic. I'll give you very interesting examples here. One second. So agency theory is what? It examines the relationship between two parties, principal and the agent, where the agent is expected to act on behalf of the principal. See, what is a normal agency relationship? If I'm appointing you as my agent, you're supposed to act in my best interest, right? You are appointed to act on my behalf. So agency theory examines the relationship between two parties. Let's say I'm the principal, you are the agent, where the agent is expected to act on behalf of the principal. However, in an ideal world, in an ideal situation, you should act which will enhance in a way which will enhance my interests because I appointed you. However, conflicts can arise when the agent's interests differ from the principal's goals. This theory is crucial in business management, especially in companies with multiple stakeholders. Okay, so your interests ideally should be sub to my interests. However, there could be reasons where you start uplifting your own interests, and that is what leads to conflicts. Okay, now let's take a look at some of these conflicts. Yeah. So let's take a look at some example. Shareholders and directors. Now, please understand, it is the shareholders' money which funds a company, and directors are paid salaries out of the company. So, directors are appointed as agents of the shareholders. Directors are supposed to act in the interest of the shareholder because not all the shareholders can come and work on their own. That is why they appoint directors. Like, for example, I am invested in the shares of Reliance. I am a shareholder. But can I go and manage the company? No. There's a reason why directors are there, right? They are managing it on my behalf for each and every shareholder. Okay, like I'm a small shareholder, you may be a shareholder. For so many of us shareholders, because not all of us can go to Reliance and start operating and managing the company, there are directors appointed. So, shareholders, we are the principal because we provided the company the money, and directors are supposed to act in our best interest. So, who is the principal? Shareholder owns the company and expects directors to maximize profits. Agent, directors manage the company on behalf of the shareholders. Their responsibility is to generate maximum returns for shareholders. The conflicts, directors might pursue personal interests, such as increasing their own salaries rather than maximizing shareholder profits. So, this is a conflict which could arise. Okay. Another example, directors are and employees. Now, in this, directors get into the capacity of principal because ultimately the employees are appointed by the directors. The directors expect employees to work efficiently and productively, and employees are responsible for carrying out the tasks to achieve the company's objective. However, employees may not always work to the maximum efficiency if they lack incentives or motivation. It may so happen that they're not motivated enough to work to their full capacity. So that is a conflict. What directors want and what the agents, or basically what the principal wants and what the agent is doing. There's a conflict. So employees may not always work to the maximum efficiency, and in that case, it is the company which loses. So agents, conflicts, these can ultimately hamper the shareholders' wealth. We will see that in more such examples also. Take a look here. Loan creditors and shareholders. Now, in here, shareholders get into the capacity of an agent. See, ultimately, it should have been the shareholders who should have provided the money to the company. Now, maybe they don't have money or they want debt in the capital structure. So they get money from other people, the loan creditors. So they become the principal. So debt holders entrust their money to shareholders through the company's management. And shareholders are the agent of debt holders. So they are required to make optimal use of the funds and provide the agreed return to the debt providers. So the conflict which could arise, shareholders pressure the company to invest in high risk projects. So think about it. When you put when you give your money as debt, you are going to earn fixed return on it, fixed 9% interest, for example. Whether the company makes 100 crores or the company makes 1 crore, your interest is fixed at 9%. You will not get extra interest just because the company earned extra. So what would you want? You tell me. Will you want the company to take excessively risky projects or take safe projects? What would you want? You have given your money as debt to the company. Now, what would you want? That the company takes high risk project or the company takes low risk projects and you are assured of your returns. What would you want? Okay, Rupinder says safe projects. Others, what do you think? You are providing money as debt. You are going to get fixed return. Whether the company makes 100 crores or the company makes 1 crore, you will get fixed return 9% on your debt. So Alok also tells me low risk projects because I don't get any benefit. You will not get any additional benefit if the company takes up additional risky projects. So the conflict arises because shareholders will want the company to take risky projects because ultimately what happens, everything residual belongs to the shareholders. So if the company makes 100 crores after paying off everything, whatever is left will be theirs. So shareholders pressure the company to invest in high risk projects that could increase profits, while creditors prefer low risk investments to protect their loan. So different stakeholders, they want different things, and which leads to conflicts. Interesting examples, right? How these conflicts have to be managed. Okay. So this is agency theory with some examples. Now you might be given some situations where there is a conflict. You might have to identify who is acting in the capacity of principal, who is in the capacity of agent, like that, or what type of conflicts could arise. So these are some examples. Now, out of all these, the most prominent conflicts is between the shareholders and the directors. The most prominent ones, the conflict arises between the shareholders and the directors. So in large companies, shareholders own the business, but directors manage it on their behalf. This is known as separation of ownership and control. See, in small proprietorship or partnership organizations, those who own the business, they also run the business. However, as I just told you, it's not possible in case of companies. So directors are expected to act in the best interest of the shareholders. But conflicts can arise, and this is known as agency problem. So agency conflicts can arise between different stakeholders, but the most prominent ones is the conflict between the shareholders and the directors. And what is that? So directors may have their own personal objectives which do not align with shareholder interest, such as increasing their own salaries and bonuses, expanding the company for personal status, which is empire building. A very interesting example lined up for this. So, expanding the company for personal status, then securing their job positions rather than focusing on business efficiency. That they want to have a safe job. Rather than focusing on business efficiency, they are just trying to safeguard their job position. So, some directors may even act unethically to protect their own interests. And these are real world scenarios. A lot of times, such things have happened in the past, and shareholders have lost their money big time. So, some directors may even act unethically to protect their own interests. And that is where the concept of corporate governance gained all the importance. So that there is control over how directors act. Because shareholders will not even be aware of what has happened in the company because of information asymmetry. Directors have more ready hand information because they are working in the company. Shareholders are sitting outside. I'm sitting outside. I don't have the depth of idea about Reliance as much as the directors of Reliance would know, right? So a lot of such mishaps have happened, and therefore the concept of corporate governance gained importance. We will be covering all of that, right? But you should know that this is nothing hypothetical that we're studying right now. So let's see how directors act unethically. Creative accounting, manipulating financial reports to make results look better than they are. Can you give me an example of a real world example here? Can you give me a real world example here? Satyam scam, artificial inflation of the books were done, right? So start reading these things. You'll find really good uh, information about what scams were done and how they were done, how long they went on. Okay. So creative accounting is manipulating the financial reports to make results look better than they actually are. Okay. Low rates and depreciation. Yes, that's also a way to manage profits in certain years. But then the IFRS, they have become very straightforward as to when you can change the rates or when you can change the policy. Then you have to report the effect also. Okay. So, but the example is valid, Harshita. Then hiding corporate activity using complex financial structures. You know what? Holding company, basically a parent company, holding in another company, then which further holds another company, which further holds another. So it's a nested structure. Okay, so these become very complex structures, and then shareholders don't even know what is going on because the structure has become too complex. So using complex financial structures may be example of special purpose vehicles. You will learn about special purpose vehicle later in the syllabus. So not discussing it now. It's a very big topic. So to conceal risks, you may set up special entities to transfer your risk. There's a proper topic, very interesting topic, which we will cover later. So that is hide corporate activity. Third, blocking takeovers, preventing mergers to keep their jobs. See, because what happens is a lot many times when the companies merge, a lot of managerial positions are removed to save cost, okay, to bring out economies. So, preventing mergers. Directors may not want the company to be merged because their job could come at stake, even if the takeover benefits the shareholders. Okay. Most of the environment costs, that is a separate concept. That's not about increasing the profits. Anyways, the cost got incurred, so it will get recorded. Preeti, what you're saying, that's a hidden cost of environment. That's a separate topic. Okay. Now, blocking takeover. So, although the takeover is in the interest of the shareholders, the directors may block it. Then, in ignoring environmental concerns. So they don't even care about the environment, causing pollution, letting go of ethical testing. So these all lead to unethical behavior by the directors just because they want to report good profits and want to safeguard their jobs. Okay. So these are the unethical ways. So agency costs. So when directors pursue their own interests instead of shareholders, it leads to agency cost, which is the loss of potential returns, basically like an opportunity cost. So the loss of potential returns for shareholders due to inefficient management. Basically, if the directors would have managed the company in the best interest of the shareholders, the return which could have been generated minus the actual return to the shareholders, that is the agency cost. Now, will we have to compute these things in exam? It will not come as a computation, but just as a concept, you should know that what is agency cost? The loss of potential return for the shareholders. What the shareholders could have made versus what they actually made. That is agency cost. Okay. And as I was telling you, the solution to all this, the directors not acting in the best interest of the shareholders, the solution to all this is corporate governance. So, corporate governance systems like the Sarbanes-Oxley Act. So, Sarbanes-Oxley came into the picture after the Enron scam. Okay, today, if you find some time, today it's already late, maybe over the next few days, when you find some time, learn about the biggest accounting and financial scams in the past. You will see all these names in the top, Enron being one of them. So, that is the scam which gave rise to this act. So, corporate governance systems like the Sarbanes-Oxley Act help control director behavior. However, enforcing corporate governance also has costs, such as regulatory compliance expenses. A lot of costs are incurred. A cost benefit approach is needed to ensure directors are monitored effectively without excessive restrictions. Okay. So basically, what is corporate governance? It is a way to control the activities of the directors so that directors do not become gods of the company. There is someone or some system which watches over their activities also, so that it is ensured that they are acting in the best interest of the shareholders. That is what corporate governance is. Okay, so what is agency issue? Conflicts arising between directors and shareholders' interests. And the solution to it is corporate governance systems which are put in place to keep a watch over how the company is directed and controlled by the directors. Clear? So let's do one thing. We will pause our class here for the day today. Okay, there's this example which I want to cover with a lot of details with you tomorrow. It's really interesting. Okay, so we'll pause here and meet again tomorrow to continue the discussion. Okay, please do join in tomorrow same time and please take care. I will be sharing across the notes tomorrow once the chapter is over. So you will get the notes on Monday or Tuesday. Bye bye. Thank you so much. Have a good night. Please take care. Thank you. No, class schedule is fixed, Arshita. I can't change the schedule. I have different classes in the morning, so schedule is done. Okay. All right. Bye bye.